money on the road. You gon' make me spend some money on the road. money on the road. You gon' make me spend some money on the road. make me spend some money on it all. You gon' make me spend some money on it all.
Hi, good afternoon. How are you all doing? Nice to see you again. Adrian Sims here. Okay, so those of you here on Monday, let's see some thumbs up so I know that you're there and you can hear me okay. Well done, Vuyo. As always, the first to respond. Okay, and a few more and coming in now. What the rest of you? What are you doing? Okay, so just in case you weren't around on Monday, I do hope the videos have been available to you. I know Miss Viewer does her very best to get them to you. Reminding you, I can't get you the videos, unfortunately. I don't have access to them. It's a SEMA Zoom account. They go to SEMA staff like Miss Viewer, who does a fantastic job in sending out the videos of the various courses I'm teaching toward the August examinations in the continent of Africa. So great to see you. Okay, nice to see you. Oh, there's Miss Viewer saying hi to everybody, which is also pretty good too. Maybe toward the end of today, we could actually convince her to show us her face. What do you think? Maybe not. I don't know. Okay, she might want not to do that. No publicity, you know, one of these people. Okay, so on Monday, we talked about how to get sort of an interaction going, how to get your answers, if you like, answers to your questions, as well as you giving me answers to my questions. And two ways to do that. One, which people are already doing, is in the chat function. If you look at the bottom of your screen, you can see it's a chat function. If you click on that now, it's a little sort of balloon like you have in a cartoon. Okay, something like Snoopy might say. Okay, click on that and you're going to see a chat going on with Miss View saying hi and telling people the recording was shared to everyone. Okay, so please, you should have that now. And we're working very hard to update all of the, a great thank you for confirming that. Working very hard to update all of the class list because people are coming in a little later. Okay, guys, probably better don't, we appreciate it, but we're going to have 300 people saying they got it. So, or however many online at the moment, 32, it'll rise. Okay, 10% of the number of people registered. Okay, so if you haven't got it, okay, then please private message Miss Bouya, just mention that, and just in case there's a problem with your email address or something. Okay, so the other way to get sort of interaction apart from using the chat is by use of the reactions buttons. If I say something mildly amusing, you can laugh. Okay, it means there's people there. Okay, at the moment, all I've got is one person's picture. Oh, no, two people's picture. I've got Priscilla, okay, and Chioma's picture, and that really is about it. Okay, it's a very lonely place to be sitting here right now. Okay, in the UK, with just two people's profile shots to look at. I might have to ask you to show me your faces, all of you. So you can use reactions button. Okay, you can celebrate when I say it's time to stop, and things like that. Okay, the other thing to do, and also, by the way, that's where you put the thumbs up. Okay, to say, hey, you know, it's okay, we're here, or something like that. You agree. The other thing you can do is to press the raise hand button. Now, that's only if you want to be unmuted to speak. You think it's better to put your ideas into words over a microphone than it is to try and type them all. Just ask you to be a little bit aware of the fact that there are going to be a lot of people on the call this afternoon, okay, and therefore it's probably better that we don't do too much of that, okay, though I do love talking to people with a group of this size and so many different countries involved, the whole thing will become very unmanageable. But as I say, if you really are burned to say something, okay, or get a bit of clarification you think makes all the difference, okay, then do, because always the chance is going to be that if there's something you don't quite understand, there's going to be about 20 other people that don't understand it either, okay, and you're the brave one who said something, okay, so you can do that. That's excellent. So on Monday, we were getting into doing some task practice. We looked at practice task number 1 a bit. We looked at how things were marked, and we started getting into mock examination number 5, which I emailed everyone again today, just before the Zoom session started, so no one can say they haven't received it. There's also a few other things in there as well. Okay, so just to recap then the salient points of Snakwheel. I think you have to go into the examination assuming that strategically Snakwheel's at a crossroads. Its share price has been reducing, certainly since September 2021, by 20% by the time April 22 came along. The reason for that, as far as we can see it in the case study, is firstly, the market is mature, the penetration now in the market is 55%, and the largest they think the market can be is 65%. So the best days are behind the company. So it's one of those tech companies that used to be sexy and now it actually has got not much future anymore, in the sense of it can carry on doing what it's doing, but it won't grow. If it does try and grow in the market, it'll probably cost it more investment funds to grow in the market than it will get a return on. And you can see that to a certain extent in the accounts of Munchbike, because Munchbike has got rising revenue. It's actually overtaking us, much faster revenue growth than we achieved in the last year, but at the expense of its operating profit. Its operating profit actually marginally fell. Now, that's not a way to do business. What they're doing is they're buying market share, as one of you said. And so consequently, that will hit us as well, because presumably their efforts to sort of reduce commissions and give away freebies and make promises and all that kind of thing that you do to get market share but increase your costs, we have to match it. Okay, so I think we have to say the outlook for our company is going into middle age. Okay, going into middle age. Now, our investors might like that, because if we look at the characteristics of our investors, they take dividend. 34% of the profits in 2021 went into dividend payments. So they do take dividend, and they're risk averse because they have chosen to invest in a company with a beta coefficient that's less than 1. So they are favoring a company that's less risky than most equity investments, and they're requiring dividend. Now that is a classic sign of a cash stock. And the same can be said for Munchbike. We don't know what its share price is or its beta is, but we can see it's paying even more dividend than we are in terms of percentage of its profits. And so consequently, the problem is going to be that shareholders have now realized this, and our share price has started to slightly decline. And as it declines, we'll pay more dividend to try and keep it up, and suddenly we'll have no growth left, because we're paying 60 and 70% of our profits out in dividend, and the problem then becomes there's not much left to build the company. And that's where we are at the moment as a company. That's the strategic outlook. The risk outlook of the company lies in legal risks and IT risks. Legal risks, it depends upon a business model that uses a distinction between an independent contractor and an employed member of staff. 23,000 of our couriers are independent contractors. But the board should be aware that in courts around the world, in the real world this is, many companies have that struck down, where they say for a substance over form. Although the legal form of the contract or the arrangement is independent contractor, in its substance, the fact they're wearing Snakwheel shirts, they've got to book holidays, they've got to tell them when they're sick, they've got to do a minimum 10 hours a week, and they're subject to scrutiny and discipline from Snakwheel means they are in substance employees. Now, if the law changes, then our company's got another problem, because how is it going to carry on when it can't even out the supply of its couriers to demand by simply pulling in more freelancers? Remember, if there's more freelancers available than there are orders, the risk is transferred to the freelancer. They're the ones sitting on their motorcycles waiting for something to happen, costing us nothing. Okay, if we had to pay them an hourly rate, it becomes the company's problem to keep them employed because they're costing us money. Okay, so that's one of the risks. The other is the IT risk, which seems to me a combination of the fact that our IT system is actually so old and so unsuitable that we can only actually have 5 restaurant chains on the app. And some of those restaurant chains are not the best in the market, and some of those restaurant chains don't even have proper coverage of the country, or indeed are open after 5 o'clock in the evening. And so therefore, we could be losing customers because we can't offer a wide service or at the times they want it. And that is largely down to the fact that we're not willing to have more than 5 because the cost of adding into the system is prohibitively high. Consequently, we need to do something about that. Also, a system developed in 2007, which actually is online to 5 different restaurants around West Aria, is probably not secure. The security of IT systems is entirely dependent upon not only our own staff and their IT security, but the IT security and behavior of the staff of 7 different contractors and many hundreds of restaurants. The possibility of a backdoor attack on the company is very high. So that's our second risk. There's not really an awful lot other than that to say. We can look at the fine detail of things, but that would be to me the commanding heights of the case. That is what it's been written for. Okay, coming back to the accounts and so forth, I know some people do like to pull them apart and do all kinds of things with them. Since I spoke to you on Monday, I did actually take a look at Deliveroo, who is the real world equivalent of Snakwheel, except it's international, and secondly, it's making a loss, not a profit. And I think it's interesting to say that Deliveroo has got revenue of about 1.6 million sterling. Okay, so okay, about the same size if we assume that the examiner's Westaria dollar is roughly £1 sterling. Okay, it's got about 1.6 million sterling, which actually supports with property, plant and equipment, not as we have got of 4.4 billion, but actually 800,000. So really, Snakwheel's financial accounts don't bear much relationship to the real world companies. Real world companies don't own loads of PPE. Okay, for some reason, the examiners put these in here. Again, I don't think it's even worth speculating why, because all that can be is data centers, and all that could possibly be is maybe its head office. Okay, well, the problem with that is that Deliveroo have got a heading which they call assets we have the use of, which would be obviously be their data centers they lease in. And even with that added to it, okay, the assets do not go above $1 billion. Okay, so consequently, the numbers, with the greatest respect, are junk. Okay, don't go too far and beat yourself up. Why is it 4.4 billion? Do they own a ship? No, I mean, how many ships is 4.4 billion? They must have a space rocket. Perhaps they're doing an Elon Musk thing of trying to do, put rockets into space. I mean, it's meaningless. Okay, please don't beat yourselves up over it. I hope that was helpful. So, in terms of examination technique, then, I'm just going to show the opening PowerPoint that I gave people, just in case anybody is online who has not received things from me, meaning examinations and stuff like that. But please, before you start sending off requests, do please just check your junk mail. People do say my material does belong in the junk mail. Probably right. You'll probably junk it as soon as you pass, won't you? I can't imagine you keeping it. There's my address. Okay. If you haven't got the stuff, please email me. Okay. And I'll add you to the list and send it to you. Very happy to help. Okay. So that's my details, if you like. Let me just get rid of this bit of drawing and we can move on. Today's examination technique time, and it's also going to be about going through, if you like, more of the technical areas of the syllabus. Okay, so one of the things we did on Monday, I introduced you to my approach to doing tasks. This is for an hour, okay, and I'm suggesting what you do is you read, not the email and the reference material. The first thing you look at is actually what the task is asking you to do, therefore guiding your thinking. Type those key task words into a document so you remember them and make them into headings so they become the headings of your answer. So your answer passes the clear and logical test that gives you the level 3 marks and not the level 1 marks. And then level 3 is a very good pass, level 1's a fail, remember. And then read the reference material, and what you're doing is you're bouncing between the stuff you know from your SEMA studies, what you've read about in the case itself, okay, and possibly to some extent in the real world, and you're bouncing around it, trying to build an answer. Then once you've got that bouncing around, you do the fourth step, which is you try to say 5 things under each of the bold headings. Okay, we're not having any conversation now about whether it should be 5 for a 4% mark and a 6% and all that jazz. It's 5, just get over it. Okay, it's a stretch target because they mark you upon whether you're comprehensive, not whether you allocate your time at 1.8 minutes a mark and all that stuff that tutors love to say, which is never true, never ever true. You always get more marks in the first 10 minutes of writing than the last 10 minutes, don't you? And okay, once you've got the whole of the answer plan in place, that means all the tasks, both subtasks in the section, it's something there. You can no longer get 0. Okay, you look at it and you say, okay, how long have I got now to write up the full paragraph? It's on the screen, it's been saved, the marker will see it no matter what happens now, as long as you didn't put it in the scratch pad. And then you try and fill in at least 2 paragraphs under each of the bold headings, thereby showing you can explain under each heading, taking yourself from level 1 mark, which is a fail, into level 2, because you're no longer identifying and listing, you're explaining, you're starting to refer to the company. Okay, the markers want to help you, by the way, they want to pass you. Okay, and then, okay, if you manage to do 2 under each heading, go back and do a 3rd. And that's how you spend your time until it finishes. That's called time allocation. Time allocation is not allocated to tasks, it's not allocated to paragraph, it's allocated, okay, to get a plan and then spend the rest of your time filling in as much of the plan as you can by stepping through the headings to make sure that you've got plenty under each. Now, obviously, if you're not very good at a particular heading and most of what you've written is guesswork, then don't spend too much with that. Okay, there's no point in carrying on writing and prove yourself a fool, is there? Just leave it as a bullet point and look like you run out of time. Okay, and go back and write stuff in other more full than the others. Okay, and that is the way you do it. And again, you know, me and my team, we mark a lot of student scripts, and it's embarrassing how many people don't take our advice. Okay, and you go, okay, so you're out of time again. And what we've got here is 2 pages on the first half and 3 bullet points for the second. You know, why do you think you fail? Okay, better to have half on each than full on one. Okay, that's the 5-stage approach. And we started looking at practice, my mock examination number 5. So I'm going to find mock exam 5 now. And again, this is for the benefits of people who perhaps weren't here on Monday, tuned out on Monday, something like that. Okay, just to remind you what we did. Okay, so this was mock exam 5. And the first task, as you can see, make it a little bigger for you in case you're looking at all this stuff on a, I don't know, a small phone or something rather than a PC. Okay, the first task is evaluate the suitability, acceptability, and feasibility of this proposal. And then the second question is your analysis of whether we should finance this by using debt. Okay, so we did a pretty good job on the first one. Let me go over to our plan now. Oh, better give you a couple of moments just to remind you what it's about. Okay, so basically the company is thinking of developing dark kitchens. They want to build 25 of them. And there's various reasons they want to do it. Okay, because one of the competitors is doing it, because they think they'll be able to be more efficient, because they think they can put more than just the 5 restaurants in there, because they can connect the IT more sensibly. This is less costly to link new restaurants. And then we've got some information about the dark kitchens themselves. But the most important thing is really the proposal, which shows you that the way they're going to finance it is they're going to build 5 a year. So although they're going to build 25 in total, they're building over 5 years. 5 a year, each one's going to cost them $9 million to build. Okay, so if you work that back, okay, it's 45 million a year. Okay, except there is a little bit of a snag because the capital investment is broken down into building the building for 8 million and then 1 million to equip it. And some of you know exactly what that's in there. Okay, and you're being asked then, okay, if they let it 2 million a year, okay, the construction costs can be at the net rents are 2 million a year, then each building will repay within 4.5 years of payback. Okay, so that's the proposal. So the question is then, how do we do the SAF? So what we did was we had a document which looked like this. I'm going to make it larger for you. And this is our plan. Let's be clear, it's a plan. Okay, so I'm going back to the PowerPoint. I'm saying to you, it's stage 4, not stage 5. Okay, to avoid people saying to me, is that then an answer? Would it pass? The answer is it probably wouldn't, because it's too brief. Okay, the markers don't mark on the basis of how many words you write, but they do mark on the basis of is it clear and logical and can I understand it? So we said then, okay, if they've asked for SAF analysis, we have to give them SAF analysis. We can't just give pros and cons. Okay, so therefore it's an evaluation, and so therefore we should be prepared to talk about the positive and negative sides under each heading. So we decided that building dark kitchens would be consistent with our mission, because it will help us deliver fast food in Wistaria. And why is that important? Because there'd be no disengagement with shareholders. And we thought also it would increase the profits of Snakwheel, because it's a very high growth business perhaps, or because it just simply, is more efficient for us? Why would something that increases our earnings and profits be good? Because it can help restore the share price after its 20% drop since September. We've also got competences of IT that we can put into the wiring and so on. That means it'll be successful. Problem we've got, though, is we don't have competences in the area of property development. And one thing it did strike me on Monday was many of you aren't very stable on what actually each of these phrases mean. So I'll just say it again for the record. Suitability is fit with strategic position, it is fit with mission, and it is competencies. That's all it is. Acceptability, we said, will help us to retain restaurants, okay? And that's important from a risk point of view, because our risk statement does say that losing restaurants is a major risk. So we have them actually as tenants in our dark kitchens. It's one more relationship we have with them that ties them in. Secondly, we felt that we could probably increase dividends, and that will please a very important stakeholder called the shareholder. Now, other people were saying things like the couriers will like it and things like that, but I was trying to limit you to say, be realistic. How much can you actually write? We don't need a laundry list of points that haven't been actually fully filled out, like a laundry list you might have in a hotel or something, or when you take your washing in, that's basically a list of stuff that says nothing about it. It just says socks. Doesn't tell you how big they are and what color they are, does it? Okay, you have to say how big they are and what color they are. So be realistic. In the time available, you're not going to be able to handle 28 types of suitability, 15 types of acceptability, and 9 types of feasibility, because it just won't be time. So I kept you reined in, but some people did talk about couriers liking it. But the problem with this is going to be increase the risk of Snakwheel, because what we've got now is a lot of money tied up in running these dark kitchens. And the problem is that if we don't let them, for some reason, then it's a huge dead weight loss, isn't it? We've made something a fixed cost, and we're normally a company with no fixed costs. Feasibility, we said, well, okay, it's about resource availability. Oh, just going back, acceptability is absolutely clearly, okay, again, 3 things. Okay, one is it's about acceptability to stakeholders. Now, stakeholders, of course, we talked about anyway, we know who they all are. Okay, except for this, who would they be? Acceptability to stakeholders, it's also something with financial return, though usually you can't say much about that because the examiner doesn't really give you any sort of NPVs and things. And finally, it's about the effect on risk. Feasibility is absolutely only about the availability of resources. Have we got the resources to do it? Have we got enough human resources, enough financial resources? Okay, have we got enough capacity in a factory, if it was a factory, but we'd probably more like talking about capacity in our data center. Okay, so what makes us think we can do this? Well, okay, we are able to raise debt, we said, because the financial accounts of 2021 demonstrated we increased borrowings last year, and we're still a very low geared company at 14%. And we've got plenty of assets we can borrow against, not least of all the new dark kitchens themselves. Also, the amount of money involved is not material. We're a company that managed to hold back 206 million of profits last year rather than pay its dividend, and this would actually only cost us 45 million a year. So unless you have a catastrophic fall in our profits in the next couple of years, extra retained earnings will probably pay for it. So we had to find a negative, because you always have to find a negative, and we said, okay, there's no management team to run the project. That would be a negative. Okay, then we got into talking about financing the dark kitchens themselves. We didn't really get to this, did we? We kind of finished on the SAF. Okay then, so what I'm going to do at this moment is just very quickly, rather than type up the answer, okay, and take a lot of time watching how bad a typist I am, what I've already done is shared with you the solution to Mock 5. And I've done this, did it today, so we can do this more quickly. But actually, I don't want you reading the solution and just putting it into the chat, typing out what you're reading from the solutions. You have to promise not to look, okay, at the solutions forward. Otherwise, you'll just be giving my notes back. Okay, so in the solution then, this is how I want your answers to look. Make that slightly smaller so you can get a sense of its sort of size. Okay, obviously I tend to be a bit quicker at this, and maybe I'll make my answer slightly fuller than you will. Okay, but you can see the same structure. And what I'm doing here, Again, I went through this with you all when I talked about practice task number 1. It's in the slide pack. Is I use an approach that says number 1, okay, underline, okay, the key point at the beginning. Okay, I call that the introduction. Introduce the point. That's what the marker wants to see. What are you about to argue in this paragraph? It helps deal with competition at other firms. Why do you say that? Communicate your point. Other fast foods are offering, other food chains are offering dark kitchens. It tells us, for example, Munchbite does in the in my mock number 5. It doesn't tell you that in the pre-scene. I made that bit up. Somebody is though in the pre-scene. Okay, and okay, they give them a competitive advantage. There's lower commissions to attract customers and also ability to reduce their costs. Okay, so what? Okay, and then you put the clincher in. This makes it suitable. Okay, because it avoids us losing customers and restaurants to rivals. The impact and implication. That's it. 3-sentence paragraphs. Okay, it's pretty much a good enough. You've explained yourself enough. The boss will have no queries. I know what you mean. Okay, and that's how you do the answers. I suggest that is what you do. Okay, certainly as far as my marketing team is concerned, that is what gets you through the exam, and they should know because they are the real examiners' marketing team, or part of them anyway. So we know what we're talking about. I'm not a member of the marketing team, by the way. By the time I finish teaching all these classes, I really am not in the mood to go and mark 400 student scripts as well. I've done it for many years, and I leave it to somebody else. Okay, so suitability. Okay, so I said the only problem with it is, notice, okay, I put a big but in the middle of it. Now my answer is longer. I just say to you, you haven't got time to do too many. I put more in just so you can sort of think of more points. And if it comes up as a question or something similar comes up, I always put the but like that in capital B-U-T, because the marker is going to say, well, is this good or bad? Oh, I see, now you moved to bad. Okay, not some discussion on the one hand, this, the other hand, that, all in the same paragraph. It really confuses the marker, because the marker is almost certainly looking for pros, cons. Okay, but it moves in real estate business. We said that, didn't we? Acceptability, the same. Okay, as we go through, again, a series of points. Okay, the restaurants will welcome it. It will reduce the cost and boost our profits. It diverts our income stream, which reduces our risk. We said that, didn't we? But, okay, partners may resent the new restaurants joining because they're now competing with each other in the same place, and the other ones will join. Number 6, number 7, number 8 restaurants join. There's always the risk of unlet space. Okay, so feasibility, resource and capabilities, affordable, okay, from annual retainers, but our cash is limited. We don't have a whole lot of cash, and also we haven't got the management team. Okay, so I made a whole series of points here. Now, in terms of marking, for those of you who weren't here on Monday, have a chance to look at the video. This one does follow the marking scheme that the examiner herself used. Okay, this is not the first time this question has been asked. I've stolen her marking scheme. That is what her team were told to do, okay, when they saw a question on SAF. And what you've got, there's a rather tricky thing, because remember, in total, there is 6 plus 6, 12 plus 5, 17 marks available for this first subtask. It's 50% of the hour. Okay, so it's going to be half the marks of the hour, 33. Okay, divided by 2. So it's going to be 17 and 16 or something, isn't it? Or perhaps it's 17, perhaps it's 16 and 16. Okay. They've actually broke it into 3. And what the markers have got to do is they've got to read your whole section on suitability and say, right then, do I think it just identifies issues? That means it's just a laundry list. Do I think it's actually provide discussion of the issues, in which case it's level 2? Or do I think it provides a clear and logical evaluation of the issues? That's exactly what she told her markers. And remember, out of 6 marks, 3 is a pass. Okay, and 4 is pretty damn good in percentage terms. Think about it in percentage terms. Okay, 3 is half marks, isn't it? It's 50%. Okay, and so therefore the markers are trying to work out whether you provide discussion or was yours particularly clear and logical. Now, one thing to say, obviously, they're not going to be very happy if you totally ignore SAF and just simply waffle about benefits and drawbacks, or better still, just waffle. Okay, they're not going to like it. They've got to put marks into those 3 parts of the grid. And what they've got, again, it's not particularly a secret. I don't think Steam has made it public. But what they've got is, as they read your script, again, put yourself in their place. Okay, you're trying to make a friend of this marker. They've got your life on the line here. Okay, what they actually have, the script is about that size. okay, except it's right over to the left of the of their marking template. Because what they do is down the side here is a box, and it stays there the whole time, and it contains the 3 sections of the exam, and it's got the 2 subsections in each one. Okay, right, the traits you saw written, okay, those are the titles. So they basically got up to 8 mark input fields per hour, and all they do is they read what you said and they put a mark in the box. Okay, so think about what it would be like if they're trying to work out whether you're talking about suitability or acceptability or feasibility. Okay, you not make yourself clear. What are they going to do? They're being paid not a great deal of money. Okay, they're going to, oh, whatever. Okay, bare pass. Okay, it's all right, not great. Okay, and then of course, when you get to the second section of the exam, you can't do one of the questions, and that's it, you failed. And people start getting marks that sort of in the sort of, 45%, so that awful mark people get, they get something like, because the pass mark is 80, as you know, 80% is 80 credits, and people get something like, literally 78. What happened? Well, doing fine till you got to the last task, and then you complete your out of time, and that killed you. So you've got to make it nice and clear so the marker can actually mark you. Okay, that's how it's all done. Okay, you can believe me on that. Okay, so we got ourselves into looking at, okay, dark kitchens. Now, I think I'm right in saying someone's asked me a question. So have a look, and always please have a question. We have to be absolutely clear here. Okay, the examiner wrote to me personally and said they do not own dark kitchens. So if you hold the case study upside down in the mirror, you might convince yourselves differently. Okay, there are 23 dark kitchen facilities, but the phrase is it serves them. It doesn't own them. It also serves all restaurants in West Aria. Okay, so it doesn't own them either. Okay, it doesn't own them. Okay, and there's no doubt about it because the examiner actually wrote to me and told me to clarify it, because the Chinese edition of the case study did say they owned them. And I queried it, and they had to reissue the Chinese version of the case study to make clear they did not own them. So hopefully that's that done and dusted. I appreciate the clarification, but really, okay, nowhere in my bullet points does it say it owns them. In fact, all I say at one point is there is some uncertainty over it, but after there was no uncertainty because the examiner wrote and said they serve and they do not own them. Okay then, so finance in the dark kitchens, advantages of debt and drawbacks of debt. Okay, now what I want to do now is I was a bit concerned at one or two of the kind of the arguments being put over on Monday, and it's not the first time in students throughout the world that I find people are very, very confused over what on earth they're talking about when it comes to cost of equity, cost of debt, cost of capital. Okay, terribly, terribly confused. Phrases like debt is cheaper, okay, which kind of is wrong, okay, and a marker will spot that immediately. So what I've done, I promise to do this, what I've done is I've put together a little teaching presentation for you, okay, just to try to see if we can clarify a bit more, okay, what on earth the cost of capital really is, okay, because I think people do get this confused and then they get themselves in a bit of a muddle. I'm not sure, I think it's because the people that teach finance tend to be mathematicians, okay, but they're accountants. Okay, so cost of capital. The cost of capital, okay, is an economic concept. It's not an accounting concept. That's the first thing to remember. It's nothing to do with cost as an accountant would see it. It's not money leaving the company. As I say there, it's not a cash flow cost to the firm. So things like debt is cheaper than equity, okay, it's assuming it's a cash flow cost, and therefore cheaper finance is going to give you more profit. It's a misunderstanding that it's not a cash flow to begin with. Okay, for example, I did make the comment that Tesla pays no dividend to shareholders. What could be cheaper than borrowing money for nothing? Okay, yet it has a cost of equity, because what it is an opportunity cost. Okay, so if I had my way, we would not talk about the cost of capital. We talk about the opportunity cost of capital. What it is it represents the opportunity cost of funds to providers. Now, opportunity costs are an economic concept. And what they're saying is that the cost to the provider of putting equity into Snakwheel, that means buying its shares, retaining profits within it, is what they could have got from their investment in the next best firm. Okay, so that's what it is. So it's the rate of return to the shareholder from the next best investment. That's what the cost of equity is. It's not anything our company pays. Okay, so I put it here that the rate of interest foregone by the bank or debt holder is a way to think about the cost of debt, and the alternative return to equity available to the shareholder is a way to think about the cost of equity. Don't think of it as a cash flow. It's not a cash flow. So this is economics, guys. Okay, now you may have done economics right at the bottom of the certificate level of SEMA, in which case I apologize. I wrote the syllabus in most of the multiple choice bank for that one. Or you probably did it at school. You may have done it at university. Okay, you probably heard the phrase your opportunity cost before, and no doubt at some point you studied a little section that says economist's view of cost and accountant's view of cost or something somewhere. Okay, like relevant cost, for example, in management accounting is an opportunity cost, isn't it? It's not a cash cost. Okay, so this, okay, is the way to think of it. Don't think of it as a cash flow you're spending. And here's the point. If the returns for investing in Snakwheel is not at least equal to or better than the opportunity cost, then the investor will withdraw their investment because they put it somewhere else. That means that the shareholders will sell their shares to get the cash back to invest in a different company. And the bank will either refuse to roll the loan forward, or it may decide to sell its debt on to someone else, and banks will do that. They'll sell bank debt on. Okay, so you'll lose the support of your investors. Simple as that. You've got to make the rate of return they want. At least the rate of return they need. So, for a second, let's move on. I'm sorry for those of you who know this already, but I did feel on Monday some people were kind of a little bit all at sea with this. So, that means that the board of directors of our company have to make the returns that are actually better than the opportunity cost of the investor. If they can do that, they'll raise the share price. Because investors will say, heck, that company's given a great rate of return. Okay, let's put our money into that one. Okay, that's the whole thing. So all of this cost of capital stuff, nothing to do with profit. It's all to do with maintaining a share price. That's what it is. Now, how in fact do we use it? How do management use it? Well, you know where they use it. They call it the cost of capital, or required rate, discount rate, hurdle rate. It's got various names, hasn't it? And they'll use it to evaluate new uses of funds, like project investment. And that's when you get tools like the net present value or the IRR. So take the simplest example of NPV. NPV calculations, take the dark kitchen as an example. Each dark kitchen, it is 9 million in time zero. And then you've got cash flows for a number of years. Okay, the rental income, okay, for the next 10 years or something at 2 million a year, whatever the figure was. Okay, 2.5 million, wasn't it? Okay, and then what we do is we say, does the amount of cash we're getting back in again from the dark kitchens, is it greater than the amount we're putting in? Is it greater than the 9 million? If it's greater, we do it. If it's less, we don't. But what we do is we say, but we have to apply a discount rate to cash flows after year 0, year 1, year 2, year 3, year 4, and so on. Yeah. All that 1 plus r to the power of n stuff you had to learn. Okay, so what is that discount rate? Let's say the number is 10%. What does that represent? Okay, well, there's two ways of looking at it. Okay, the correct way and the wrong way. This is the wrong way, first of all. It's nothing to do with inflation. It's nothing to do with fear of loss. Okay, it's nothing to do with okay, time value of money to the investor. I have no idea why they talk about stuff. It's just not that. What it is representing what that same money could get if the investor kept it and invested it in another company that could yield 10% to them. It's the opportunity cost. It's what they give up. They give up a rate of yield of 10% if they put the money into another company. Therefore, we have to give that to them. That's what it is. It's the opportunity cost. Okay, so we use it to evaluate projects. So if it's got a 0 NPV, we go maybe. Okay, positive NPV, definitely. negative NPV, okay, then theoretically we don't do it. The IRR, internal rate of return, as you know, is the discount rate that returns the net present value of the project to zero. Okay, what we then do is say, okay, the IRR of the project is 7.5%, and then we compare it to our cost of capital and say, well, okay, as long as the cost of capital is the same as or less than the IRR, we will accept it. The other way we use it, though it's not so popularly known, is we actually use it to evaluate the existing use of funds, because we actually evaluate our divisions on the basis of it. We work out the profitability of divisions. We call it the return on investment or return on capital employed. And we set as a performance target, don't we, for divisional managers? Okay, well, again, you work out the ROCE is 8%. Is that good or bad? What are you comparing it to? The answer is you compare it to the cost of capital. And if it's less than the cost of capital, that division is destroying shareholder wealth. It's dragging your share price down. Okay, if it's more than the cost of capital, everyone's happy. Okay, and that's performance management sorted out one level too late, because that's managerial level. That's the cost of capital. So how do we calculate the cost of capital? Well, normally the one that you're familiar with is the WACC, the weighted average cost of capital. Okay, so as far as the cost of debt is concerned, which is half of the cost of capital, or part of it, in our company's case, it's 14% of it, so 14% levered. As far as debt's concerned, you can, if you want to, consider it as being a cash flow cost. It's what we actually gave the bank. Okay, it's actually what the bank receives, not what we gave it. So it's actually before tax shield, technically. Okay, it's what the bank receives, not what we pay. But okay, think of it as being the money we pay on the bank. Okay, that's reasonable. So there's not much mystery on the cost of debt at the level of SEMA's exam. If you get into high finance, you start to realize that things called debt beaters and things like that. It starts getting just as complicated as working out the share cost of capital. Let's say the interest rate is the cost of capital. Okay, the amount of interest we pay on loans. Okay, because that is what the bank is satisfied to receive from us. That's why they gave us a loan in the first place. But it's always about what the other person, what the lender's minimum acceptable return is. So we assume the bank is happy to receive 7% or 3%, whatever the figure is. The cost of equity, okay, is not a cost in the cash flow sense. Okay, it's not dividend, that's for sure. Okay, what the cost of equity is going to be worked out by a number of different techniques. I'm going to mention the capital asset pricing model, CAPM. And what we do there is we work out the cost of equity, that is the minimum level of return acceptable to our shareholders, by presenting them with alternatives in our mind. We say, if they bought shares in us, they've given up, firstly, a risk-free rate. Risk-free rate is the rate of interest in a very secure bank, isn't it? Or it's the rate of interest on very high-quality government bonds, normally short-dated bonds. Okay, so let's say it's 2%. So I'll put some numbers in now. I promise you no calculation, but I'll do them now. So the risk-free rate is 2%. Okay, what's that? It's the rate of interest on very secure investments. Why is it risk-free? First, because the bank will give you 2%, or the investment will give you 2% every year. But more importantly, you won't lose your initial principal sum. If you put $100,000 in here, okay, you are going to receive $2,000 a year of interest. At the end of 5 years, you'll get your $100,000 back. You cannot lose your capital sum. That's why it's risk-free. Okay, and then we say, well, of course, you can't really compare the minimum return on equity with the minimum return on a piece of debt, because equity's got completely different characteristics. It's got risks. So what we do is we say, what is then, okay, what is, generally speaking, the premium that equity markets return to shareholders over and above what the risk-free rate does? And we say, well, the average, okay, sorry, it wasn't equity market beta, I beg your pardon, I was rushing. It's equity market risk premium. Sorry, not quite right. Okay, equity market risk premium. What we're saying is, what rate of return over a number of years have people investing in this stock market actually obtained? Now, we don't say what is the total return they obtained. So if the total return that the stock market gave to investors across a wide portfolio of shares was 10%, okay, sorry, it was 12%, we call it 10%. What we say is, okay, They received 12%, okay, but actually the amount they received above the risk-free rate was therefore 10. That's how much more they get from putting money in equity than in debt, because what they're picking up on is the risk in the equity market. Overall, investors got a return of 12%, 2 plus 10. But some lost their shirts because companies went broke, had bad results, share prices fell. But overall, okay, the return was 10% at the level of risk of the stock market. So therefore, Snakwheel shareholders are going to require the same return. The cost of equity is going to be 2 plus 10. No, it's not, because the risks of our company aren't the same as the stock market, because we've got a beta coefficient of 0.7. So therefore, it works out that our shareholders require at least 2% to compensate them for actually not putting the money in the bank, plus a premium for the risks of our shares, okay, of, well, 0.7 times 10, 7%. So therefore, our cost of equity is 7, 8, 9%. Does that sound fair? Okay, that 9% is the minimum return that we have to give our shareholders to stop them selling our shares. If we exceed it, they won't sell our shares except for a higher price, and there'll be lots of demand for the shares. Share price will go up. If we fail to reach it, then some shareholders will start to sell. And people won't buy their shares unless the share price is lower, because our return is not as good as is available somewhere else. The share price has to fall to a level whereby the return on it is actually the same as the market. Okay, so far. Okay, so let's go back through those PowerPoints again, make absolutely sure. Okay, so what I'm saying is, it's not true to say the cost of capital is a cash flow. It's not. It's an economic concept of opportunity cost. It is the rate of return the company must achieve to satisfy its investors. And what it actually is the rate those investors give up by putting their money into our company and not into somebody else's company with a return. Opportunity cost, the cost of one decision in terms of what you give up. It's not a cash flow cost. Okay, if we fail to actually reach that, they're going to sell their shares and the banks will probably withdraw lending over time. If we exceed it, then the banks are happy to lend to us, and also more importantly, from our point of view, the share price will go up. What do? We use it in capital investment appraisal to make sure that the project will give a return that's at least as high as the opportunity cost of the funds to the investors. And we can sometimes use it to compare the actual profitability of assets we already own. And if we find assets that are not generating a return on investment at least equivalent to our cost of capital, we outsource them, we sell them, we shut the division down, give the money back, or put it into a better alternative use. Getting hold of the cost of debt, the minimum rate of return acceptable to a bank, okay, you can use a proxy of how much do we spend on interest. It's the interest rate. Cost of equity, we are left having to try and work it out from observed stock market behavior. And we simply say, well, the risk-free rate in the economy is 1%. The equity market, we're going to apologize, risk premium, okay, is amount above that. So shares generally give a better return than debt. Okay, so therefore our shareholders will require that return also. But then you realize our company's risks are slightly less than the overall market. And so therefore, okay, we can actually give them slightly lower return on equity than would a stock market as a whole, because we're less risky. Okay, this brings us this damn diagram now. So this brings us to what's called the optimal capital structure. So we've got the cost of debt and we've got the cost of equity. Okay, the cost of debt, the minimum return acceptable to the lender. Cost of equity, the minimum return acceptable to the shareholder. Start with the blue line, cost of debt. What we're going to do is we're going to say, what is the effect of capital leverage, the ratio of debt to debt plus equity, the percentage of funds that comes from our debt. Okay, what's the effect of that upon the weighted average cost of capital? Weighted average cost of capital is the minimum return we have to achieve for our investors overall, meaning both the banks and the shareholders. So the banks seem to say that they want to receive at least 3%. That's the rate they need to receive to lend us money. I know it's the rate we pay, but think of it in terms of the rate they receive. Okay, and they'll actually be happy to lend at that rate or to receive that rate, providing our capital leverage does not become excessive. If it becomes excessive, then they start to back off. Okay, because basically our risks become too great and they're not prepared to actually lend except at very, very high rates. They're junk bonds and things like that. That's not going to affect Snakwheel. We're nowhere near that. You've got 14% gearing, for heaven's sake. Okay, so 3%, that's what we have to achieve on debt. Now, equity is slightly different. If there was zero capital leverage, they would want to have 9% return. So the shareholders require 9% return. Now, what is that return? How do they get the return? It's a combination of the dividend they receive plus any rise in the share price. Okay, so share price goes up, it's an increase in shareholder wealth. They receive dividend for a few years, that also makes them richer than they were before. Okay, so 9%. So let's say the company decides to go for a level of capital leverage of 30%. What you see below there is the weighted average cost of capital calculation. We're saying, well, okay, we're going to borrow 30% of our funds, and that must achieve at least 3% to satisfy the banks. And we're going to borrow 7% of our funds, and that must actually get at least 10%. But it's 9. It says 10. Oh, wait a minute. Read up the line. Oh, it's 10. Okay. Okay, I'll come back to that in a moment then. Well, why is that going up? Anyway, stay with the maths. Okay, so it's 30% of the funds at 3. Okay, it's 0.3 times 3. Okay. And then you've also got 70% of the funds at 10%. Okay. So therefore, 7.9% is our weighted average cost of capital. I hope maths works. Okay, so I think that's good. Let's try a bit harder. Let's go to 50% capital leverage. At that point, okay, the cost of equity has gone to 11%. Okay, fine, whatever. Okay, and now we've got 50% of our funds has to earn 3% and 50% has to earn 11%. Okay, and that comes out at 7%. Okay, that is the weighted average cost of capital and how you actually get to it. Now, my diagram could be better drawn. I appreciate that. Okay, the red curve is effectively the product of the slopes of the blue and the brown and the magenta curve. The top maroon-looking curve and the blue curve at the bottom. The red curve is actually by calculus as a combination of the slopes of two of them, but trying to get it to work in a diagram is pretty hard. Okay, so there we go. So why then is this cost of equity going up like this? We said it was 9. The shareholders are quite happy to receive 9. We had no gearing. So why is it going up? And the answer is that they're seeing their risk increase. Okay, why is their risk increasing? They think if you have more capital leverage, it's more risky for the shareholder. Why? Well, there are simple explanations of this. Things like in the event of the company going broke, they won't get their money back. That kind of statement. But actually, the main reason is because if you've got a lot of leverage, you've got a lot of money paying interest. A lot of your operating profit is now paying interest, which means if the operating profit drops, then it's going to drop the shareholder profit disproportionately. So in a bad year when operating profit is low, the shareholders may find their actual bottom line profit becomes negative. The banks still get their money. Now, of course, in good years, when operating profits are rising, then interest does not increase because it's where it is. And so therefore, the shareholders get even more of it. The bank doesn't participate in the good times, and unfortunately, it doesn't suffer in the bad times either. And therefore, if your bottom line profit is volatile, your share price becomes volatile. EPS times PE ratio equals share price. The PE is not moving and the EPS drops, the share price will drop, right? That's why. So consequently, the risk increases. The risk is not of the doomsday of the company closing down, it's the risk to the share price. okay, that the shares they bought might drop in value. Perhaps they bought the shares after a good year when the profit was very high, and consequently the share price went right up. They bought at the top of the market, and now they're looking down a hole now, aren't they? In a bad year, crash, the share price collapses, and they lose most of their investment. Why? Because the bank's actually taken most of the profit for its interest. Okay, so what do we call that? We call it the beta coefficient. So actually what you've got there is the beta going up, because the share is now becoming more and more volatile, and consequently the beta in the cap end's gone up. It used to be 7.7, now it's 0.8, then 0.9, then 1, then 1.1. Tesla, you know, was it 1.87 or something, isn't it? Okay, very high. Make sense? So what's this bit here? Why do companies always want to go there? Well, in economics, the answer to every diagram is either the lowest point on the curve or it's where two lines cross. That's economics in a nutshell. So consequently, this one is one of those diagrams where it's the lowest point on the curve. That's the equilibrium point, the happiest point for the company. So the corporate treasury department will try and find the lowest weighted average cost of capital. And they'll do it by combining their debt and their equity, okay, to try and get to that point. Now, it's only a theoretical point, because practically doing is extremely difficult, because the cost of equity is bouncing around all the time. The share prices keep changing, alternative returns keep changing, interest rates bounce around as well. Okay, so you know, it's a theoretical place. Okay, why do they try to get the lowest weighted average cost of capital? Why there? Two reasons. Well, there's three reasons often cited, and one is wrong. It's nothing to do with profit, nothing whatsoever, because it's not a cash flow. Okay, what we're saying is, why do you want to move the capital structure to a place where the rate of return we have to achieve is as low as possible? That's what it's saying. Okay, why? Well, number one, more projects become acceptable. That flatters management ego, doesn't it? They can invest in marginal projects and still do it with a positive NPV. So they can invest in all the things they didn't used to invest in. That's one reason. But the main reason is the share price. Because the hidden thing behind this is that actually they think that this is the discount rate the stock market applies to our future free cash flows. So the stock market's got a forecast of our future free cash flows, which it discounts back, okay, to come to the market value of our company. And if they think that we've got a high cost of capital and the market demands a very high rate of return from us, then a given level of cash flows gives us a low market capitalization. But if they think we actually have got a very low weighted average cost of capital, and that means they're very satisfied with a relatively low rate of return, then our share price goes up. Okay, so it's all about managing the share price. That's capital theory. Okay, so let's not have phrases like debt is cheaper. But here's the point. What would happen then if you did increase debt? You're at the optimal level, and you decided, in answer to MOP 5, subtask B, you decide to fund the dark kitchens solely by using debt. What would happen? Would it be cheaper or not? Well, in cash flow terms, you might think it's cheaper, but then you're assuming that you're trying to say dividends are cost, which of course it's not. It's a deduction from profits, so the cost is not a cost. But actually, in terms of the weighted average cost of capital, it will actually increase it, wouldn't it? Because you've moved yourself into the level of gearing that's higher than the optimal level. So it would actually increase your weighted average cost of capital, make it more difficult to make enough money to actually afford to build the dark kitchens, because your rate of profit on the kitchens may not be enough now. When a company retains profit each year, it increases equity, doesn't it? Yeah, if you increase equity, you move to the left. You reduce the gearing level. Okay, so that's why companies, when they retain more profit, also borrow more money. That's what Snakwheel did. It retained 206 million extra retained earnings in 2021, and it increased its borrowings. Why? It's trying to stay on that line. It's trying to stay at the bottom position. Okay, so I don't mean to go into teaching or revision courses, but I do appreciate this is a tough area. And I think what oftentimes happens, when I first saw it, I was taught it by a professor, and he was filling the board with equations and everything else, and I never knew why I was calculating anything. Okay, but that is the economic theory of capital structure. Okay, so hopefully that was helpful. Feel free to put thumbs up and tell me you understood. Okay, some people find that area incredibly difficult, and so I explain it, okay, and they find it even more difficult. Okay, but remember, cost is opportunity cost. Okay, it's not cash flow cost, it's what you have to earn, it's not what you have to pay. Let's go to our next question then. Dan, thank you. Nice to see you, mate. Okay, Dan, I had the correspondence on Monday. Dan, are you going to go for the August exam? You're trying to work out whether you can go for it or not. What do you reckon? Take the risk? You are. Good man. Okay, remember, guys, today is the 3rd. Okay, so you've got 6 more days to enroll for your examination of August. Okay, it's always worth having a go. Okay, unless you absolutely are clueless about it and want more time, in which case, remember, the case changes after August. November and February are a different case, which no one knows what that is at the moment. It's not been released. Well, I suppose the examiner knows what it is, but I don't know what it is. Okay, so we now come to the second question. Should we finance the dark kitchen by using debt or by using equity? Okay, what sort of things then? I've just booted up the chat function here so I can see what you're going to write. Okay, so what then are the main benefits of debt? And no one's going to say it's cheaper, are they? Thank you. Okay, so what are the main benefits of debt? Why would funding this thing with debt be a good idea? The last date for enrollment is the 9th. It's Monday the 9th. But if you enroll late, you'll be like arriving at a party late or a sale late. All the good stuff's gone. The sooner you enroll, the better choice of slots you've got. Okay, you can't, you'll find yourself in a really bad place. Right, great ideas coming through now. Okay, one person said no dilution of control. Now, what they've done there is they recognize what the examiner really wants, which is, in fact, you'll compare it to equity. You're saying one of the benefits of debt is not equity. In other words, if we weren't going to use debt, we use equity and we dilute, okay? Because obviously, okay, we are not in debt, we're not issuing new shares, which is one of the ways, okay, that you actually might fund this. Okay, now we've got the real cost accountants coming in, the bloody tax benefit. Okay, I'll come to that in a moment. Okay, so yeah, readily available, Andy, that's a good answer. Okay, so we normally say it's quick to arrange. Okay, you make the point. Okay, SW, okay, low geared and lots of assets. Okay, including the dark kitchens equals, okay, bank will lend, won't it? Okay, what's the next one? Okay, so tax deductible. Okay, interest can be set against tax, so-called tax shield. Okay, why is that a benefit? Basically, it will boost profit and cash flow. It won't make it bigger than it otherwise be. There's no such thing as, 150% tax relief, okay, on the interest, but it offsets it slightly. Now that does, to a certain extent, invite a fictitious kind of comparison with dividend, which is not, okay. But that don't say that. Don't say equity dividend is not tax deductible, because that's treating dividend as a cost. It's not a cost. It's taken after profit, isn't it? Okay. Okay. A company you're talking about has an end time payment, and then someone else has linked duration of the project. You're both saying the same thing. You're saying matching, aren't you? Loans can be matched to the cash flows of the project. Now, actually, we should say dark kitchens, shouldn't we? Otherwise, what we're doing is writing out our notes. Okay, dark kitchens relate to the situation. I did say about SW earlier on. Okay, now I'm going to say mark to cash for dark kitchens. Why? Okay, the funds are needed gradually. Okay, Remember, it's 5 kitchens a year. And also different start dates, presumably. And you know, projects, you know, the money going in varies according to the life of the project. At certain points in the project, you need more money than others. So really, you'd be looking at a monthly borrowing, wouldn't you, just to meet the needs? Okay. And also, obviously, okay, need to repay during the economic life of the asset. And in this particular case, okay, buildings last longer than fittings and the IT. So therefore, you could borrow 25 years on a building, but you're very foolish to borrow more than 5 years on the IT. Okay. Anything else that makes debt good? You're doing really well. So what I'd be doing when I came back to talk about this, I'd underline that point, underline that point. Okay, underline that point. I think you've pretty much scooped the pool, to be truthful. I mean, people do say things like the interest can be cheap if it's secure on an asset. You could put that in, couldn't you? If you wanted to. My solution does. Okay, what's the drawbacks? Then let's have them. What's the drawbacks of debt? Okay, excessive borrowing will impact your credit rating. Okay, I would be careful there. I just don't think in this particular case that it's going to be excessive. You've got numbers. Okay, you know it's never going to be more than 445 million. Okay, and the company is you know, huge. It's got 7 billion assets. Now, it's a good point though, so I'll just talk about it. If you did borrow too much and your credit rating fell, bear in mind it's not just the interest on what you're borrowing, it's all the interest on all the existing borrowings. Okay, so you sometimes find that you borrow on a project, the interest rate causes the interest rate on your company to go from 12% to 13 or 14, and that actually means that the interest cost on all the existing borrowings completely demolishes the profit on the thing you're about to buy, something called the marginal cost of debt or the marginal cost of capital. Okay, good stuff. Limitations, covenants, etc. Yeah. Okay, so lenders may put limitations like what? Well, presumably on the use of the dark kitchens. Or sale of them. One of my other students said, you know, if you borrow buildings, you build buildings and you've got debt on them, very, very hard to then lease them because the bank gets in the way all the time. So it wants to know who you're leasing it to. Okay, okay. So I don't think you see potential bankruptcy. I think that just sounds a little naive. There's no, why would the interest on this amount of debt bankrupt that company? I mean, the interest is not going to be bigger than the capital sum, and the capital sum is smaller than our retained profits. I think it's be careful. Okay, that's very close to the phrase "the share price fell and the company went broke," which the marketers love because it's just nonsense. Okay, be careful. Okay, it's not doomsday scenario. Okay, so what you probably say, and that is, okay, the interest costs, okay, are a compulsory negative cash flow. Okay, problem with that is going to be, okay, it can make the share price volatile. That's the way to put it. Not, it might go broke, okay, because it's not likely in this company's case, is it? Look at the size of the investment, look at the company. It's not going to happen. But it would potentially increase the capital gearing, which would have the effect of meaning in the event of the operating profit falling, it would then find the share of profit fell far, far more. In last year, a 30% rise in the operating profit led to a 34% rise in the share price. That was because of the capital gearing effect. Okay, any other negatives with debt? Okay, so we've got limitations. We're talking about sort of covenants and so forth. Okay, I think you're very careful to say you need security of assets. Earlier on, you just said we have got them. Okay, so it looks like you're talking generally now, as opposed to you already argued we've got the assets, but then you can take them away in the drawbacks, really. Be very careful. It is a grown-up exam, okay? And they will say, that's silly. You shouldn't be a CFO. Okay, markers can be quite nasty. Okay, anything else? Anything else? General drawbacks of debt. Okay, it's covenants normally. Covenants are promises. Okay, imposing covenants. Okay, promises. Okay, and basically the debt can be repayable. Okay, now the other things you can put in obviously will be things like interest rates may rise. Okay, there's no evidence in the case they will, but they could. You could say at the moment, in the world they are at the moment. The market might think, oh, well done, you've been reading the newspaper. American interest rates have gone from 0.5 to 2.5 in 1 year, which I know to some of you 2.5 sounds low, but think of that in terms of percentages, 500%. Okay, that's quite a change, isn't it? Well done. What's our conclusion? Yes or no? Or was that not the question? Yeah, okay, you got it. The big double N's got it, which is, okay, they need to balance the use of debt with the use of equity to maintain the optimal capital structure. Okay, which is always your conclusion. That is a sentence you always write. Okay, so there's nothing wrong with funding a project solely by debt. Okay, providing you're willing to fund something else solely by equity. Okay, to keep the balance. And sometimes they do. Okay, companies may decide debt is better for this project because of something or other. It's certain it's bound to give cash, that kind of thing. Okay, whereas that one over there is a bit speculative, so we'll give equity to that one. Okay, but overall, you have to maintain the optimal balance of debt to equity. Otherwise, as one of you says, using solely debt would actually have the effect of increasing the cost of capital, as we saw in my diagram just now. Okay, so we've done some good work, haven't we, so far this afternoon? We've actually answered one of the most common questions on the exam. Okay, well, two of the most common questions. Number one, evaluate a strategy. Don't assume that SAF is always asked. It's oftentimes not. It's oftentimes just benefits and drawbacks. But you can still use the ideas of staff about, fitting with mission and competencies and strategic position and, stakeholders and risk and profit and resources, and just decide whether you can think any of that is positive or negative. You might find it's we got some of the competencies, but some we lack. Okay, pros and cons. Okay. Good stuff. Let's move on to the next one. Mock number 5 is one that I wrote in order for my class students to get practice in a few areas. It's not one that I would take in for marking, though it is actually of the exam standards. Most of my questions are based on past real questions. So here we go. I do think, by the way, dark kitchens will be in your exams in August, because there is so much information in the case about them. And there were no questions on dark kitchens whatsoever in the May examination, and your examiner was very quick off the mark to clarify that they don't own any. So I suspect I pretty much nailed it with this one. I think either we're going to have to set some up with this, or we're going to acquire a company that already operates them. because we already serve some dark kitchens, but we don't own them. Okay, so who does? And will they be for sale in August? Business valuation, strategic acquisition, funding. Okay, you can audit for due diligence and a bit of IT. Okay, you can see the whole thing for 3 hours, can't you? Okay, so here I went for something slightly different. Again, reminding you, I'd like you to think about this in terms of the 5-step approach. Okay, I'm trying to also get you into exam technique. Okay, so let's do the first stage together, shall we? Let's read the task to identify the subsections and type them. Okay, so I'll go back to the task just in case you weren't able to get up on your screen. Okay, I'll put it on this screen instead. Okay, and behind the scenes, I'm going to type my plan. Well, I'm going to type the headings at least. I will send this document to you, okay, at the end of the session, or an hour or so after the end of the session, maybe. I will come back and move the go back then. So there's the questions. I'm assuming you type them down, in which case they're going to look a bit like this. I thought that there was 2 parts to the ethics question. The first one said to you, what are the ethical risks and how can you defend Snakwheel? Always look for the and. Okay, because it breaks the question into 2. Therefore, you need 2 headings because 2 questions wrapped up in 1 subtask. There's no and in the middle of the second question, therefore it's 1 question. Examiner reports frequently say students do not answer all parts of the question. And I think to myself, that's probably they didn't see all parts of the question. Okay, the and usually denotes 2 parts, in the same way as suitability, acceptability, feasibility denoted 3 parts. Okay, so ethical risks of dark kitchens, defending them, the role of internal audit in preventing staff exploitation. Okay, so next we have to do in my 5-step approach is to read the material. But let's just stop for a moment, because what we have to remember is that we need to think, well, what theory do I know that's supposed to be something to do with this? Okay, guys, so what we're going to do right now is a bit unusual. Okay, is I'm going to ask you in the chat function to brain dump, okay, stuff you know about ethics. Just brain dump it. What do you know about ethics? Where have you heard the phrase before in the connection with SEMA? SEMA Code of Ethics, good. So who's going to give me the big 5 then? Objectivity, if you can pip code, go on and write them down then. So O's objectivity, integrity, just define them as you write them, if you wouldn't mind. So objectivity free from bias is a very good definition. It's objectivity is the word, isn't it? Yeah. Okay, so okay, ethicals involves morally right actions or moral consequences of actions, absolutely right. Okay, straightforward and honest, well done. Okay, professional behavior should be legal and also not bring disrepute, isn't it? Straightforward and honest again, you're all good at that one. Okay, Tucker's model is not in the exam. Okay, I don't know what I'll tell you where Tucker's model is. Tucker's model is in the ACCA syllabus, and some tutors teach it. Okay, it's not in your syllabus. SEMA does not do Tucker's model of anything. Okay, please leave it. It's just the code of ethics. Okay, just the code of ethics. Tugger's model was something in there. Well, it was in their audit paper for a while. Okay. And I met the examiner one time, and he himself did not know what the model was in detail. No such thing as fairness in the SEAM ethical code. Okay, friendly behavior. Okay, so you've got the PIPCO. So you know then that you'll be looking for potential breaches. And say management could be argued to breach this duty, that duty, and that duty. Okay. What about internal audit? What do you know about internal audit? What comes to mind when you think of internal audit? Controls mitigate risk is a good start. Which is kind of what they're asking, isn't it? Okay. I think one of you fell into a trap there. Risk and control strategy. So, okay, so two of you said incurring separation of function, or one of you called it independence, yeah. Measuring compliance, yeah. Checks and balances, reports to audit committee. Okay, all good stuff. Okay, should report to the audit committee of the board, absolutely right. Okay, so you're brain dumping, which is what I want you to do. Okay, so we can sift out of all that stuff what's relevant here. Okay, so a little bit of brain dump. Let's read through. Okay, so we're trying to think now. I mean, if you talk about internal audit, you're talking about control. So what comes to mind when I use the word control? If I say controls, what comes to your mind then? Any acronyms come to mind? All good stuff you're writing, guys. All good stuff. Soap spam. Okay, I wonder who'd been PIPSA, really? I don't know what that one is. Soap spam, OAP spasm, damp soap. Yeah, that's the one. The internal controls. Come on, what's the other one? Irish girl's name. What's the other one? Irish woman's name. Famous from Gone with the Wind. The name of the house that burnt down in the film Gone with the Wind. An Irish girl's name. Come on, go for it. Starts with a T. Starts with a T. Risk control procedures, starting with a T. Almost. Tara, that's the one. Yeah, Tata's an Indian steel company. Tara. Yeah, transfer, reduce. Okay, so transfer, avoid, reduce, and accept. Yeah. Okay, so that's stuff you should be thinking of, because that's what internal audit does, is it tries to strengthen internal controls, doesn't it? It monitors compliance with internal controls and tries to strengthen them. Okay, that's its job, and report upon them. Okay, so we may have some ideas as we read through it. You try and think of some controls, you're trying to think of how audit might help. You're also trying to think of things like, where's the ethics in all of this? Okay, have a little read. So partway through the project, 18 months in, okay, and some allegations have been made, and the chair just said it makes no difference when actually employ these people. Is our reputation at risk here? Okay, what is it? Oh my God, it's Hell's Kitchens. Okay, undercover reporter, reality beyond the industry is not as appealing, but appetizing as fast food you eat. Okay, it ends up with a statement. Okay, I'm not saying the food's not tasty, but the sort of human misery involved in making it, you wouldn't leave a bitter taste in your mouth. I should have been a journalist. Have a read. Somebody said you should have been a journalist, Adrian, you're a lousy teacher. There are two of the variants in May and ethics questions. Okay, PIPCO. Which one do you personally feel sounds right for this? Which one are you going to start with? Okay, so who's not being honest and straightforward? Be careful, integrity. Okay, it doesn't mean morally good person that will go to heaven. It means you tell the truth. But why are they not telling? Why is management lying? I need to understand that. Who are they lying to? Or are they being dishonest? Are you saying they're being dishonest? In what way are they being dishonest? Okay, I don't know. I would agree that's integrity. Threaten to report them. I think it's bullying, isn't it? Okay, honest and straightforward means you tell the truth. Okay, you don't hide anything. I'm not sure. Okay, I think you're better off professional behavior. Okay, but you'd have to argue that it's going to either break the law, I think they are, and also that it's actually going to bring the company to disrepute. Okay, there's no such ethical term as professional conduct. Okay, be careful. Okay, so you know that, go with that, are you? Okay, let's make a start then. So you're planning your answer. Okay, and I really do think you have to run down the PIPCO, okay, and see if you can find two that stick. Don't try and get all five in there. The examiner is known to be quite critical of people that bring confidentiality in for no particular reason. Or better still, recite the ethical code of seamen, say, and this is unethical. That's an immediate 0 or 2, you know. Ethical risks, okay. So what you're going to do starting, I totally agree with the person that said, let's define it. Okay, let's define the damn term before we go any further. Okay, so ethics concerns the moral, the word is moral to use, isn't it? Implications of these working conditions, I suppose. Now, you don't need to say, I'm going to use the same ethical code, not that at all. Okay, just get straight into the one you think is broken. Now, you guys think it's a breach of integrity. I won't put breach of integrity down because I don't think it's technically correct. I think you're absolutely right with breach of professional behavior. We have professional beaver then. Right, okay, so always explain what the actual principle means. Just focuses upon it. When you start writing honest and straightforward, you realize actually you're wrong, it's not integrity. Okay, so this is actually, okay, duty, it's all about duties, okay, to maintain rules and regulations. And not to bring the actual code is not to bring the profession into disrepute. And you've got to bend it now. Snakwheel into disrepute. Okay, why do you think it will? And some of you say, well, firstly, they're breaching laws on minimum pay and work permits. Definitely, and probably health and safety. I can't imagine there aren't laws covering kitchens, can you? Definitely. And you'd say, well, okay, the actions of this discovery will bring SW into disrepute. Now, who actually is breaking the ethical code here? Well, allegedly, it's the management of Snakwheel, isn't it? It's people. Okay, so we've got one. So if I was going to actually put that into a proper thing, I'd obviously underline that. Okay, I'll try and make slight sentences of that. Okay, so what else do you got apart from simply professional behavior? Remember, you're not trying to sort of fill the thing. Now, we say duty of care. Okay, there's no actual principle called duty of care. So how far, what's the one you're actually referring to there? You don't make many mistakes, you're up to something. What is that one you're looking at? There's a thing called due care, isn't there? Where does that come in? Professional, competent, due care, isn't it? Yeah, okay. Professional, competent, due care. Okay, this one's a really weird one. I've got to maintain your professional knowledge, okay, which I don't think is very easy to apply to many questions, but okay. Okay, maintain professional knowledge. Poor examiner's got a problem. She has to examine ethics, but the seaman doesn't teach it. So she has to use this code. Use the ACCA and the sort of the various models you're referring to, and the Carroll model and all of those. At least they actually do teach it in the syllabus while they examine it. The poor examiner's been told to examine ethics. All she's got is PIPCO. Maintain professional knowledge and be diligent. And what you're saying is that they have not fulfilled duty of care to the people in the kitchens. Okay, that's a pretty good answer. Now you can shoehorn some more in, but the examiner is critical if you sort of try to get all 5 in. In my solution, I do put integrity in. So I actually say this is a company who actually has, amongst its staff values, amongst its core values, that we treat employees properly. Okay, I'm just looking for it now. Perhaps you'll join me. Okay, so the kind of thing where you boot up the PDF in the exam room, take a look. It says, we take care of our employees. Well, they don't, do they? At least people will say they don't. So therefore, what we're saying is lack of straightforwardness. Their values are misrepresenting the company, aren't they? So it's the values that are a lie, not the behavior in the kitchen. The behavior in the kitchen is a sad truth. Okay. Now, the other thing I always do in these questions, I recommend you the same, is you do this, find a couple from PIPCO and try and apply them. But then what you do is you say, what's the consequences? And I'll tell you why that is. Say the consequences because SEMA sees breach of ethics as a source of risk. It's in the risk part of the syllabus. Okay, so risk has probability that people may blame you. But now you've got to talk about the impact and what would the consequences be. So perhaps you'll have a couple of moments now to think about, well, what are the adverse consequences to the company of being accused of being unethical over its involvement in the these dark kitchens with a landlord who should know what's happening. As far as the public's concerned, there are kitchens. They don't realize we actually let them out. So what's the consequence of that going to be? What's the damage to the company? What's the risk? Again, be careful jumping to share price will fall. So I need to know why it will. Who's selling their shares here? Okay, so bad publicity leading to loss of customers and revenue. That's a really good answer. You've almost nailed that one, haven't you? Bad publicity, okay, loss of customers and revenue. So what you're saying is, this is the thing I'm concerned about. The consequence is bad publicity, of which that newspaper article in the beginning equals loss of customers and revenue. What kind of customers? You might say ethically minded customers, okay, which basically are the majority of the ones that buy fast food, because the so-called snowflakes or millennials are the ones with the high ethics, and they are the ones who mostly buy fast food. Okay, there may be penalties from the government. Okay, what sort of penalties? Fines, investigations, new laws. I mean, landlords are not responsible, but actually, because so many landlords have actually had tenants who, got themselves into trouble. Many landlords now are responsible for things like, electrical safety and making sure the windows, can't throw them out on the road and that sort of stuff. Okay, no, not a consequence for each principle. I think you get yourself into a mess then. I think there are bad things from being thought to be unethical. That's what you're saying. I don't think you can you may get some inspiration off a couple of them, but I think just general. Okay, consequence of unethicality, collective action from the workers. I won't. Okay, I'll put it in. If they think they're being treated unfairly completely, that's what will drive them to collective action. Okay. From kitchen staff, you mean? Yeah. Okay, could happen. Any others? Okay. Okay, why do you think the share price is going to fall? Yeah, I'm liking that one. I'm not sure if you'll call it Lashini, but I'm liking that. The idea that certain kinds of investors will be, well, okay, so ethical investors sell shares. Okay, why? Okay, well, that makes fall in the share price. Now, why is a fall in the share price a problem? You're writing to a manager. Fall in the share price, in other words, criticism and threat to management. Yeah. The reason that we care about share price falling is because that's the kind of thing that gets the manager sacked. Today, I read that the chief executive of Tinder got sacked. Is it sweat left or sweat right? I'm not sure. Tinder's a dating app. It's one of those dating apps that tends to measure in hours rather than days. And basically, their profits fell, and she got sacked. That's the problem for share price fall. Okay, it's nothing to do with like the profit falling. It's to do with management lose their jobs. Okay, so ethically sensitive partners may leave us. Yeah, indeed. And wait till we see the third task. Absolutely right. Okay, so loss of ethical restaurants. Okay, again, think about your time. We don't start having ethical, couriers leaving because you can get the unethical ones back in. Okay, can't spell partners today. There you go. Yeah. Again, that then leads to loss of revenue. Of course, the very loss of the ethical restaurant partner will probably lead to a fall in share price. We're back to practice task number 1 again, aren't we? Okay, so the question says, how can you defend us? How can you defend the company? Okay, I want 5 defenses, please. 5 things the company could do, okay, to defend itself against all this. Any ideas? What can they do? Okay, and this is just a sort of general sort of mind dump, really, isn't it? Okay, 5 things they could do that would defend them against the risk of this. The slight problem with the first idea is that they're not actually our employees. So I don't think we can report somebody else's wages. I think you're better in the second one, okay, is to actually publicize steps to improve things. Now, when you build out your answer, you might make a couple of comments what those things might be. Revise contracts with the restaurants to make sure that they don't exploit workers. Okay, break clauses in leases if you do find problems. Appoint a spokesman to actually do this. I don't dislike that. That's a good answer. I'll put PR consultancy. And of course, there are these disaster PR companies, aren't there, specialized in digging companies out of holes. Okay. Again, phrases like it's profitable, maybe supported by shareholders is not a defense. It sounds like you're taking one from sort of ethical things like it makes money, it's okay. It's not. I mean, I don't know. I suppose you could defend by saying it's our job to make money. But what might you at this point say? Say they're not our staff. Okay, so they're not our staff. Okay, we make money on the rents, but they're not our staff. We didn't do this. In restaurants. I think that's not the only thing you can do. One student I had in the Gulf said, well, they're not ours, that's the end of it. I thought, well, yeah, but in the world of media, that won't be enough. They'll say, but you should have known. Your hands are dipped in their blood. Okay, any other ideas? Communicate, yeah. Okay, be careful, Eniola. You're starting to shift it, go into the next task, aren't you? Set code and standard of operation. Okay, I think you could okay, set codes of conduct for the kitchens and restaurants. Not really restaurants, are they? Restaurant operators. They're McDonald's without a restaurant, really, aren't they? Yeah, okay. Vetting. Okay, so you've got some good stuff there. What I'm going to put in here, which I would like you to put in future, is express empathy. Not responsibility, but say this is terrible. This is absolutely terrible. We're disgusted this is happening. We're doing everything we can to stop this. That way you become part of the solution, not part of the problem, don't you? It's a thing that large companies don't do. Okay, and then promise to investigate. Absolutely right. Okay, so what's the role of internal audit in preventing staff exploitation? Okay, look at the question again. That wasn't quite the question asked. I have bent it slightly for a reason. How could internal audit their procedures stop this happening in future? Okay, so what are you going to say? CFO says, okay, tell me how internal audit can develop procedures, stop this. What's the first thing you've got to say? There's something wrong. Yeah, it's the duty of management. Internal audit should not develop procedures. Otherwise, it's self-review, isn't it? When they come back in a year's time to assess the adequacy of the procedures, apparently say they're okay because they invented them. Okay, so it's actually compromising independence. Okay, and that's a catch in the question. That's why I rephrased it. I thought, nope. Okay, we're not going to say this is what they're going to do, because actually what you've just done, you demonstrated you don't understand the independence of internal audit if you went too far. And I know a lot of you, of course, realized it, but only one of you actually said it. Okay, all the other stuff's good ideas. Okay, all the other stuff's good ideas, but you have to phrase it slightly differently. What you're going to say is that IA, oops, pardon, IA should not develop procedures. In the exam of November, or was it February, there was a problem with software coding in a games producer, like a video games company, like Call of Duty or something. And the question was, should IA go and check the code? Okay, and the answer was, well, not really. That makes them the controls. The job of the IT department to check the code, or product development team to check the code. But what IA should be doing is monitoring the procedures and judging their effectiveness. That's her job. Okay, now this kind of question is, you can say they could look for. I look at your comments and they're good. The things you said there are sensible. Okay, things like check the HR policies, but I think you'd be careful. It's not our staff, it's somebody else's staff. So you'd have to check the HR policies of the restaurants. Okay, we don't employ them. Okay, all we do is building a box. Okay, other comments you made here. Look into recruitment process of the restaurants. Okay, anything else we could do? Identify flaws is a good answer ever. Anything else? An ethics committee is okay. It's a little bit high level, Dan. I prefer you said how you stop kids and migrant workers being bullied in a restaurant inside dark kitchen. I think I'll look at. Keep putting ideas in, guys. Keep putting ideas. What could they do? So now actually what you're going to turn your answer into is that they should be monitoring the existence of the things you're talking about. That's what IA should be doing. Should be monitoring the existence of some of the things you're talking about. Now, one of the things that I teach my gang is in longer courses, so actually any question about how does IA do something is a simple 5-stage answer. It's always in her exam something that's happened for the first time. She always is something that's happened for the first time. So therefore, the first thing you say is that IA needs to gain expertise in the area. Which one you did say, to be fair? At the moment, there are a bunch of the audit clerks. What are they doing? And they're judging, okay, employment practices. And when they become so good at that, so it may be things like recruiting. Expertise, I'll say, shall I? Also, look for best practice. We're not the only people, okay, who have got migrant worker situations and may have, so what is best practice in preventing exploitation? Who else has got this problem? Should we go to some clothing factories, see how they avoid sweatshops, okay, or various nail bars, see how they do it, okay? So you say, well, okay, the first thing you need to do is get their experience up. The second thing they need to do is to assess or record the existing systems of control. Now you get your chance. Okay, so you might look at something like, for example, the lease agreements. Or break clauses in leases. How can we kick them out? How do we control this? We might be able to inspect the HR processes of some of the kitchen operators. How do they make sure they are overworked? How do they make sure they got work permits? Okay, so assessing those things. Remember, they're not our employees. We did nothing really wrong. We owned a box and we let out the space to people who are bullies. Once you do that, next stage is they have to assess the adequacy of the systems. Now, you can't really say much about this, although you've been inventing things that are wrong. What you say is basically you report weaknesses. Who to? You've been round some companies HR department to see what it does things, and how you find something wrong, who should report to? Well, you would normally report to the responsible managers to encourage improvements. That's how they do improvement. They say to somebody, well, I've done an audit of your place. You have the wash-up meeting, and they say, well, we found these problems. When we come back next time, we don't want to find them again, thank you. Or if it's absolutely chronic, okay, you could do an emergency report to the board. Okay, you actually say, you know, this is absolutely chronic. Okay, the systems are hopeless, and then you go into emergency mode. Okay, then what you do is you've got the systems, you've been told how it works. So notice it's 1, 2, 3 so far. Okay, underline the if you like the 5 points I'm going to make. Okay, and this is a little model you can use. Where the difference comes between poor and good answers is application. You know, when you say recorded systems of control, you are going to have to say, well, what are you looking at then? What systems of control do you mean? Okay, and then what you do in stage number 4, okay, is you assess the implementation of the systems. Okay, so maybe, for example, observe staff in the kitchens. Of course, the problem is going to be you'll stand there with a big badge with internal audit on it. Won't be, they'll sweep all the difficulties away, won't they? So you might have to go in clandestinely, what's called red teaming, when you go in undercover, okay, dressed as a member of staff from a temporary agency. What you're really doing is collecting data. Very ethically suspect, but it happens in a lot of places. Okay, inspect payroll. So this is the one that a lot of councils immediately go for. They'll say, how can internal audit deal with this? They should go to all the kitchens and look. Okay, and the problem then becomes, you're going, well, yeah, but if they're there looking, you know, the day they went, there's no problem. You know, everyone knew they were coming. Okay. So normally what you do is you look at the systems that actually lead to the outcome. Okay, of course, what you can also do, and I'm sure the migrant staff will love you for this, is you can actually try to interview them, can't you? Because they're terrified. You can interview managers. Again, the heading, assess implementation, the magic is when you explain, well, how would you assess that? And finally, report all findings. Okay, who we report to? Again, to the management of the kitchens. It is still trying to improve them. Okay, also though, to the board of SW, normally, okay, as you rightly said, the audit committee. I mean, they're not going to run up there, but basically they'll produce an audit report and the audit committee should review it. Okay. Although actually I wonder if it would be the risk committee, in fact, they go to on this occasion. Now there's one little problem, one of you spotted it. Our company doesn't appear to have an internal audit function. So as one of you said, appoint an internal audit function. Doesn't appear to be one. I think the examiner will say you're being cheeky. Okay, so I think you have to assume there is one. If you want to be cheeky, just say for the purposes of answer, I will assume there is an internal audit function. Otherwise, the answer is what's the role of internal audit? None. We haven't got one. Okay, I think she left it off by mistake, or she does intend to ask a question about should they have one. Okay, so we got through quite a lot there. So what we just did then, if you noticed, was we did quite a lot of section D because we looked at the, let's go back to the questions again. Okay, we've done a bit of C. We did the pros and cons of debt. We also looked at the cost of capital, okay, and the whole funding thing. That's C, that's source of finance. Okay, We then went into ethics, which is part of D. Okay, big part of D. 2 of the control questions in the exams of May were ethics questions, not anything else. Okay, you can get your damp soap out. Okay, or your soap spam, and then you've got the internal audit question, and that's quite a common question. The internal audit questions tend to fall into 2 groups. Either it's how would internal audit do it, which you just did, or the other one is going to be would it be suitable to do it? Okay, should we deploy internal audit for this? Are they the right people? That's the other question that she'll ask. That's been it, really. That's all she can ask on internal audit. And that is half of the topics in section E. The other one's corporate governance. So never underestimate the importance of doing internal audit questions, because they're going to come up very, very often, because they're one of only 2 topics in the final part of the exam, whereas in things like the environment stuff and the strategy stuff and the finance stuff, there's loads of topics they can ask. Okay, so we'll take a break right now, if it's okay with you. When we come back, we'll review my solution. I'm just remembering what the 3rd section is. I will briefly touch on the first one, okay, because this, how would you evaluate a risk, okay, has been a question which the examiner has asked in the past, and students have got absolutely floored by it. It's actually not hard, as long as you're methodical with them. Okay, she's asked a question about how do you evaluate the risk of a competition policy coming against you? How do you evaluate the risks of adverse comments from your staff on social media? Okay, and so on. So evaluate risk question is quite a nice one to do. Okay, so I think it's around about the top of the hour. Let's take a break then till 15 minutes past the hour. I say the hour, obviously, because we're all in different time zones. Okay, and we'll come back and we'll carry on. Is it going okay, guys? I see a thumbs up if you're getting value from this. I'm sure Sean will be monitoring this. Are you getting value? Thumbs up at all? Oh, thank you, Larry. Okay. Go Celia, thank you, Brenda. Very good. Okay, so got value. Given it was free, you got value. Okay, had you had to pay a couple of bucks for it, maybe it wasn't value. Okay, there we go. Susan's actually enrolled twice. Very, very devout looking Susan there. Okay, excellent. Okay, guys. Hi, Moses. How you doing? Okay, so then let's take a break. I think I see a hand up there from the big double N. Is it a question, or is it just to put your hand up to say hi?
It's actually a question.
Go on, go ask the question. It's nice to hear a voice.
I wanted to find out on the 2 points that you raised there, them inspecting the payroll of the kitchen operators, and also reporting to the boards of the management of the kitchen operators. I'm just thinking, on what basis do they go directly to the kitchen operators? Is that not because we're not the ones that are owning the kitchen the dark kitchens?
Landlords normally have a right of inspection. I mean, I think for the purpose of the exam, your question's well taken. I think for the purpose of the exam, just overlook that problem. Okay, otherwise, what you're going to do. But actually, as a landlord myself, you do have a right, okay, to inspect. So you can go to them and say, well, I'm going to inspect your premises. But I think you'd have to do something on the lines of, either we're going to serve notice on you or you help us. So, but you're quite right. Where's your authority? They're not your staff. It's not your kitchen. Okay. I think for the purpose of the exam, I think you have to say, well, that's what we're going to have to do. We'd have to find a way of getting access to look at these things as a condition and carrying on. I think that's all you could say, really. I think that was the question, wasn't it? Okay. Thank you for the thumbs up there. Okay, guys. It's still 3/4 past, I'm afraid. Okay. We need to get through some stuff today. So I'll see you back here at 1/4 and we'll press on. Thank you, guys. We're back again. So we've got another hour and 3/4. We can get quite a lot done in that time. Are there any particular topics that you would like to do? Perhaps you put them in the chat for me. Any particular topics you'd like to do? So we've done the old debt versus equity. Okay, cyber risk. Okay, see if we can do that. Okay, currency risk. Yeah, I think that's a good one. Anything else? Yeah, I don't know about digital strategy. I don't even know what it is, to be truthful with you. I think it just gets a phrase that gets thrown around. Digital strategy isn't well defined. The SEMA seems to, in the syllabus, refer to it in a kind of the application of certain foundation digital technologies, blockchain, 3D printing, and that kind of stuff. But then you actually, when you read about it in literature, digital strategy actually turns into digital thinking, whereby you're prepared to be sort of, breaking the mold with some wonderful. So I kind of don't think it's something I want to cover. I think what we've got is a series of technologies. The examiner doesn't examine a thing called digital strategy. Should ask you about to evaluate a strategy which involves the use of technology, possibly. Okay, but not actually anymore. Yeah, so we've got currency risk and currency management. Yeah, okay, so we can look at that. Anything else? The rest of the syllabus then, Eunice. Okay, div policy, acquisition and mergers. Okay, of acquisition and mergers, we did do acquisition and mergers yesterday, or on Monday. We talked about whether we should purchase Munchbike or not. So I think I've given you all the frameworks to know there. I think valuation is an important topic, because that turns into a section C one. Business valuation is one of the assessment outcomes. I look at that one. I think probably the impact interest rate changes is probably that the bus has left. The bus left in May. She asked a question then on that one. I'm more than happy to tell you, what do you think they're going to be? Number one, it will lead to a reduction in demand, is what you're supposed to say, because the higher interest reduces the income of households. So that is one. It will increase the cost of capital of the company for two reasons. Firstly, it would raise any variable rate interest it has, and secondly, it would tend to reduce the share price. And the third one it will also do, of course, it could also cause the exchange rate to fall. The only problem with that one is our company is not particularly affected by that at the moment. It has no international obligations, and therefore there is no foreign exchange risk in our case. It has to be created by something that happens in the exam. There are two foreign exchange risk questions on the exam of May, both involving contracting an outside organization to improve the IT systems. One in the wake of the ransomware problem, and the other in the decision to go for smaller restaurants as well as the large ones. Integrated reporting, I won't do it, if you don't mind, because it's such a rare question. Yes, there was a question in the exam of May upon impact on social relationship capital. The last one before that was November 2020. So I think it's unlikely, and the time we've got, I think it'll be a little difficult to get through that. I think it'll be a poor use of time compared to some of the other ones. So obviously you will in your own revision thoroughly look at all those areas. Okay, so let's take a look then, carrying on slightly with the ones I wanted to do, bearing in mind of the things I was thinking of doing. Okay, yeah, somebody else wants integrated reporting in GRI. I mean, GRI hasn't been examined in this current syllabus at all. And as I said, there have been two questions only on social relationship capital in the present syllabus. So I don't think we can do it really. Okay, I'm just going to do my mock 5 solution now, just to sort of give you what the Americans call closure upon some of the stuff we've done. So if you recorded a question on debt versus equity, please look at the marking guide. Okay, its benefits and drawbacks of debt versus equity. Okay, so it's kind of always the examiner puts it into the framework of, if it's not debt, it'll be equity. So therefore, some of the benefits of debt will be the drawbacks of equity, and so on. Okay, but once again, you see the level 1, generic benefits. In other words, all someone done wrote a notes out. Secondly, explanation of a wider range of potential benefits with some application in dark kitchens, its timing, and the financial position of Snakwheel. And then obviously we go to the really good, clear and logical, okay, and close application. Okay, and the markers really, you know a level 3 when you see it, okay, but not many markers put marks into level 3. And one thing I can tell you, and that is that they will never give 8. Okay, they might give the 7. Okay, but markers never ever go to the top of the mark range. It's just a feature of the marking process. The examiner herself apparently constantly tells them to use the full range of marks. Really trash the ones that are bad and really boost the ones that are good. But nonetheless, okay, markers don't give the top mark because I suppose they always think that in an hour's time an even better answer will come out, and they wish they hadn't given the mark to you. So they tend to keep it in reserve and never give it. I'm sorry, but it's the truth. Drawbacks of equity, once again, the same kind of idea of, are you applying it? Is it a comprehensive range of drawbacks and so forth? So my answer was, okay, that they can fund it, okay, by debt or equity. Okay, so here's the benefits of debt, tax relief on interest, borrowed as needed, using the numbers from the question. Okay, making the point that we've been given the numbers. Yes, you said avoid dilution of shareholders. Property can be used as security, that will reduce the borrowing cost, that's the cash flow cost. Drawbacks of debt, higher capital leverage will make share price more volatile. Then we have may become unavailable or expensive in the future. And that was one she put into her own answer when she asked a question like this in August 2021, where she actually said, if you're starting out in a long-term investment project, what happens if part of the way through the banks won't lend to you anymore? Why would that be? Perhaps the government told them not to lend so much. Okay, perhaps your credit rating has dropped, or possibly the interest rate's been put up to such a point you don't want to borrow it. Okay, I remember in the property business, once the banks had trouble in 2008, you could not borrow money. It's as simple as that. If you're halfway through a project and you want to borrow some more money, you won't be able to finish it because you couldn't get the money for property investment. So she mentioned that, and I put it in my answer as well. And banks may impose conditions like debentures and also covenants. Then you have that sentence, should mix, okay, use a mix to retain optimal capital structure. This means a level of leverage that minimizes overall cost of capital. Okay, the standard answer. And then you could say, however, it could use debt for the IT and fixture, they got limited economic life, okay, but possibly it might want to utilize equity, not debt at all, for the buildings because they're part of the permanent capital. It's an attempt to sort of say, but within the need to understand the optimal capital structure, there does seem to be a chance here. In the ethics question, again, these are her marking schemes, not mine. One of the things that one of my friends who does mark says, the examiner constantly says, ethics is not straightforward. They should be able to see it from both sides. In other words, ethical arguments, okay, and sometimes, okay, defenses or counter arguments. So we have professional competence and due care. We have professional behavior. I told you I squeeze integrity in because I think that it doesn't reflect their core values. Now, interestingly enough, as I mentioned to you on Monday, that was a question in the exam of May, when a non-executive director faced not with dark kitchens, but faced with the fact that 23,000 of our couriers are paid worse than 3,000 of our couriers. There's a question on the ethics of that and this and that. And another question said, non-executive director wants to know, okay, whether in fact the way we actually treat the independent couriers is a breach of our core principles. Because we actually have got core principles that seem to say that we actually like our employees. And you have to discuss whether it did or not. So arguments for why it did breach, arguments against, conclusion. Okay, then we have the consequences of unethical conduct. Investigation, I said, ethical investors selling shares, ethical customers may seek to use the platform, and staff might leave in protest, not just the ones in the kitchen, but also other staff. to say I'm not working for a company when I'm not actually able to tell my friends who I work for because we're so badly represented in the newspaper. Defending ourselves, express concern, explain not Snakwheel employees, promise an investigation, actually take steps. I think it's a very reasonable answer, don't you? Okay, so how can the internal audit team develop procedures? Okay, my first comment is, okay, it cannot develop procedures. Okay, I spotted the catch in the question, but it should actually audit them, okay, by identifying best practices in hiring, search and record, assess the process and report, assess the implementation, and report to the audit committee. The marketers must get fed up with reading answers like this, but of course they don't. Because the one thing the marketer wants to know is who taught you and is it a good structure? Okay, and interestingly enough, the exams report recently said there's been a big improvement in the way that answers are laid out. Okay, and I'd like to think that I played my modest part in that. Okay, so we've done the ethics part then. Okay, moving on then to the next question. Okay, I'm not going to start typing answers to this one because I want to get through some of the ones that you want to get through, which are things like the foreign exchange and so on. But I think it's important that we actually do understand how to evaluate risk. Okay, so how can we evaluate risks to the company from Bagetto's threat to break its partnership with us? And then another question at the end, which I'll just scan in a second, how useful would routine pest analysis be in helping Snakwheel evolve problems like this? Okay, so have a read through them. How can we evaluate the risks? Now, reminding you, evaluation is impact times probability. That's how you value a risk. Okay, so don't forget that. It may help you get an answer. How can we evaluate the risks? One of you asked, will I share the notes? Yes, I will. The typed ones I'll send you later, and all the solutions as well. That I've already sent you solutions, I think. Okay, what's Bagetto saying? Getting a lot of bleeping at the half hour, so you could have filmed on the television. Okay, now this question is very similar to several questions in the past when there was a thing, okay, threatened, and the company was going to have to deal with it. Regulatory interventions over a merger, okay, and there was another one about staff posting derogatory comments about the company they worked for. They were actually a video games company. And of course, that was very closely based, I suspect, upon the Activision or Activision Blizzard problem. How can we evaluate the risks? Okay, the way to do this question is to remember to break it into two parts. How do you evaluate the impacts? And then how would you evaluate the probability of that actually happening? So how would you, so state me some impacts. If they break their partnership, what sort of impacts would there be? What sort of impact would there be? Baguetto broke their partnership with us. Remember, we did risk, okay, and we talked about commercial risk and financial risk. We had hazard risk. So any of those risks? Okay, so loss of revenue and decrease in profits. Okay, so how would you evaluate that? How would you evaluate the loss of revenue? Put a figure to it. I think it's pretty straightforward. How much commission did you pay them last year? One thing you'd say. So what was the actual total commission we paid to Baguetto? Okay, that would be an indication of the financial loss of losing them, or one of the financial losses. Okay, so literally just look at your commission remission files and say, well, that's what we paid them, and this is what we earned, that's how much they earn for us. Okay, so any other risks apart from you wouldn't get their commissions anymore. Yeah, there was this other one, which I think one you put earlier up. Okay, what loss of number of customers lost? Okay, so why would measuring a number of customers lost be different from the amount of money that you make from commissions of selling their product? Be it more subtle. If we go for the money effect of this, you say, well, obviously we're going to lose the commissions from Baguetto if they leave because they're not our customer anymore, not our partner anymore. But you seem to be saying something else that actually relates to the case quite closely, which is, of course, bit general, some of the points being made. What do we know about people who eat stuff from Baguetto? The other people in their family are probably eating pizzas. So you'd have to recognize that if you lose Baguetto, you'll lose the customers of Baguetto, but you might also lose the people who order Baguetto at the same time as other products for people in their family. Or perhaps they want some bakery products along with their, or sandwiches along with their burger. Okay, so how would you evaluate that? What a lot of you are stating what the risks are, and that's not what you're asked to evaluate. How would you work out the size of it? How would you work out if it was a low or a high risk, and the kind of money it would cost? So how would you work out that in addition to the people who solely buy Baguetto, so in addition to the money that we would lose, that we currently earn from supplying Baguetto's customers with Baguetto product, we think we could lose other customers because they would no longer have the choice available to them. So even though they don't personally buy Baguetto, then in fact they would leave the app, or sometimes they buy it once a week or something, and now we no longer have it. I think you'd have to. The problem with percentage fall in visits is, I think that's retrospective after it's happened. Okay, they're saying to us they're frightened. It hasn't happened yet. So although I would give you some credit in the exam, I think you have to use your data to see how many times the Baguetto product was sold in conjunction with other companies' products. And that way you could say, well, okay, therefore we find out is that every time a Baguetto order is made, there is a 10% of those orders also have other products from other restaurants, and actually that would be this amount of money. Okay, you take a rough figure, couldn't you? Okay, what sort of cross that is there? Okay, so we can look a lot at the money. What other things we look at? Again, I think you're suddenly jumping around. You know, it's about losing Baguetto, not other threats you invent. Okay, I know there's other threats you could invent, but you've got to answer the one that the examiner's actually asked you. You don't start bringing in investigations by governments and things, because that's not relevant. It's just wasting time typing it in, really, if you did it in the exam. What else would you say? Okay, one of you got kind of right. I don't know loss of customers that order sandwiches will lead to a fall in the share price. I think just the loss of Baguetto would lead to a fall in the share price. So the impact would be the share price might fall because they'll see this as an adverse thing, which may cut future profits or could lead to other restaurants leaving. Okay, so you try to evaluate the share price drop and say, well, that would be one of the impacts. You haven't said it's going to or not happen yet. You're just saying it would be something I would evaluate. I'm not asking how you evaluate it. Just yes, you could evaluate it. Anything else? So what you're doing, you see, is you're kind of thinking of what the risk would be, and going the extra step and going, how would I measure that? Okay, so what else you've got? So quite right, but be careful of the sort of we can measure something after they've left. Because the question is set in the idea they haven't done it yet. You're not going to wait 2 years to work a risk out. What you've got to do is to work out if you're going to respond. Any other impacts? Okay, so we've got a good one there to get, which is what would the cost be of replacing them? And again, it's a great answer, okay, because you're saying, well, it'll be the IT costs, and then that costs money. And another person said, well, we'd have to evaluate whether we can actually replace them, because if we could replace them, the impact would be much less, wouldn't it? Just get somebody else, get a Subway to supply us. Okay, and that kind of thing would evaluate the risk. You're trying to evaluate the impact. You're trying to evaluate the impact of it. If they were to go, okay, what kind of impacts would there be? Good. Now go to the other side of the equation, the probability. How could you evaluate whether they will actually break their partnership? Yeah, I mean, things like there could be a fall in the share price and threats to the board due to lack of, yeah, absolutely right. You can say that. Okay. I mean, obviously, you might want to consider how many people in the world actually share the kind of strong ethical and religious convictions of these people. But okay, so that's a clue to a probability, isn't it? Okay. They haven't done it already, but you've got to say, if you read the reference material, it said they've given our company 6 months. Okay, to fix the problem, or they will go. So how could you actually work out the probability? You could review the agreement terms, okay, with the ghetto, just to work out whether in fact there would be financial penalties to them that make them less likely to want to go, the likelihood they will actually break. Okay. Okay, so a lot of you are saying what you need to know. This question, unfortunately, is asking you, how would you find out? That's the problem. How would you find out? Okay, so think about it. How could you assess whether they would actually carry this out? I don't mind that answer, Dan, to meet with them. I think they've given the ultimatum though, but I think that's fair enough. Okay, yeah. I mean, I don't think assess the ethical behavior. I mean, what you need to say as your statement there is to say, assess the availability of alternatives for Beghetto that are ethical. If you find out that all your competitors have got exactly the same unethicality, then Beghetto's got nowhere to go. They won't leave you because they're going to jump from the frying pan to the fire. But you say, well, okay, are there competitors out there who could take Beghetto's business? And again, what build my answer out, I'd say, well, are there any of the platforms that need another bakery or prefer Beghetto to the one they've already got, or could meet Beghetto's actual standards? So you said to me, okay, number one, are there alternative Beghetto they can go to? That's a probability thing. Okay, have they ever threatened people in the past and done it? I wouldn't say just us. Have they got a history of actually following through on this, or is this just basically saber rattling? Okay, I think it's a very good answer. Okay, what else again, some of you are jumping from impact to probability without even realizing you're doing it. Okay, the effect on the share price is not a probability, it's an impact. Okay, I'm trying to get you methodical. Impact, will it happen? Probability, will it happen? Impact, if it does happen, what's the damage going to be? Okay, we're now talking about how could you work out if they will actually do it? You're all missing the obvious one given, which is, can we meet their deadline? They've told us they'll go in 6 months unless we do certain things. So one of the things you say, well, can we meet a deadline? Can we actually do those things within 6 months? In which case, you say if we can do them, not a problem. If we can meet their demands within 6 months, then probability becomes vanishingly low. In which case, the risk is not there anymore, is it? Okay, so I think some of you are kind of like floundering a bit on this one. Okay, it's much easier if you keep those two phrases separate and say, right, to evaluate a risk, I know that risk is impact times probability. Therefore, part of what I've got to evaluate is what would be the damage to the company if they were to leave, which is a classic risk analysis question. What would be the bad things? You know, well, we'd lose some revenue. Okay, how much would you lose? Well, we have to look at what they spent last year. We might lose other customers as well because they buy combined. So what could you look at? Well, we can look at the revenues that were earned from combined orders, not just the ghetto orders, and make an assumption that we lose 10% of them or 30% of them. Okay, what else might you get? The share price might fall. You know, why? Well, because investors will be really upset if the ghetto went. Okay, so how many ethical investors have we got? What funds are there? Are there fund managers who are known to be strongly ethical as well? Go to the same mosque or temple or church as these guys. Okay, or, you know, wherever the religion may happen to be. Okay, so you think on that side of the equation, and then you say, okay, now, are they going to do it? You say, okay, what's the alternatives available to them? There's lots of alternatives available to want their work. Yeah, they're more likely. Otherwise, they're just threatening. Okay, can we meet their deadline? Have they ever done anything like this before anywhere else? If you find loads of examples of them threatening and never carrying it through, then you go, they're not going to do it. What do you think? Evaluating the risk. And as we said, the better opportunities is, can we find somebody to replace them? If we say, look, they go, but we can actually replace them, then the impact of the loss of revenue will be much less. Because you won't have the problem, you've still got sandwiches available because Subway've taken it. Okay? And again, we're still sort of seeing people answering a different question. Some of you are talking about how to control the risks. It's not that question. The question is how to evaluate them. Very careful. Okay, beware the trigger word. How risks? Oh, measure risk. Oh, it's a question on how to avoid risk. It's a question of what are the risks? No, it's not. It's a very, very measured question. How can you evaluate the risks? How would you gather enough information to scale this risk? Because risk registers are internal documents in which you've got to put numbers to risks. They become 1 times 1s, 5 times 5, okay, and all that stuff. So she's asking a simple question, which meets the assessment criteria of can you contribute to the maintenance of risk register? Okay, it says, how would you find out? Okay, I said by assessing the extent to which it affects, I need more than that. What effects do you mean? Do you mean they create cross sales? Do you mean that they actually would lead other companies? Do you mean just the revenue from them? You've got to be very specific. I think everybody will put in general points. Okay, how would you find out? I don't write her questions for her. I just copy them. Okay, and I assume that some of you are haunting the examiner's reports now. Okay, go online. Okay, just Google. You can get it through MySEMA, but you can actually get it straight off the CGMA website. If you type in SEMA strategic case study past papers, you get to a whole bunch of resources. I'll warn you, one at the moment's dead. It's the February 2020 paper. One of them, all the links are dead. You can't get hold of the information. I have written to SEMA and said, do you know that you've got a live document where the hyperlinks aren't working anymore? And therefore you can't get that. You get a document down and take you anywhere. You can't look at anything. But the others are all there. And I always recommend you look at the examiner's reports. Don't bother with her solutions because they're not easy to digest. Her report. And there she tells you what made students pass and fail. On these kind of questions, she always says, students didn't answer that question. They didn't know how to evaluate risks. They simply gave you lists of risks. They talked about how to avoid the risk. Okay, anything but answer the question. Okay, so that is mock number 5, and of course there's a solution there. I know you're dying to know how a company, what my answer is, how would I evaluate the risks, and of course I always like to please. So how do we evaluate the risks of this company jumping ship. My answer, which is an answer, doesn't contain all the good points you made. Okay, how can we evaluate the risks? Okay, so what I wrote down was, well, okay, firstly, evaluate the impact. How much earnings will we lose if we lose them? Okay, and then is there actually another sandwich partner available to take their space? Can we assess the impact of other restaurants following? Now, you don't know that they will, but if you can do some best case and worst case scenarios, can't you? Okay, we lose one other, we lose all the others. Okay, assess the impact on the share price. Now, how would you do that? Okay, I mean, I don't think she necessarily asks you to actually say, well, how will you do it? But you know, what you would do, I think, is actually take a look at your investor profiles to find out who the main shareholders are and see if they've got any well-known history of ethical intervention, or whether they're sort of, you know, they've gone out there and said they are. Evaluation probability, okay, we have to work out whether it's serious in its threat or not. Okay, so, you know, what profit will they lose if they lose us, and that kind of thing. Assess the probability of meeting their requirements and thereby getting rid of the threat, and also assess the attitude of stakeholders to alleged labour practices. Does anybody care? I mean, they're happily saying we'll lose customers if they discover exploited labour and so forth. Well, just look at the fast fashion industry. If you want to see an exploited labour business, and it's one of the fastest growing sectors of the economy. People don't necessarily care. Okay, you could then take a look at the kind of customers you've got and say, well, okay, have they made ethically conscious choices? Are these the kind of people who do leave companies and stop eating what they eat because they've got an ethical high horse to sit on? Or are they, most of them don't really care? As far as the Pestel's concerned, she does like asking these questions on Pestel. Remember, the question was, how useful would a routine Pestel analysis be in helping Snakwheel avoid problems like the exploited labor inside its kitchens? Okay, now the question obviously is going to be benefits and drawbacks, and asking for your opinion. Okay, so once again, you say on the one hand it's useful, the other hand it isn't. It makes the question easier. Once you see a question that says to you, what do you think? You immediately go, I don't know what to think. I can't answer this. Be methodical. They only want to see how you think. So what benefits would there be, okay, to a Pestel analysis in identifying problems like the growth of exploited labor? But, okay, what limitations would there be? Okay, in what ways would it not be helpful? In what way would it not help you to avoid? So I wrote down there, okay, so the value, reasonably useful. I think you can detect changes in social expectations. To what extent are people starting to become concerned over labour conditions? And you can apply it to many other things as well, couldn't you? A different question. Environmental matters, you know, animal cruelty in the burger business or whatever. Okay, so what, you know, you use it to detect change in social expectations. And you and I both know that the world's become a little bit woke, hasn't it, in the last sort of 4 or 5 years? And Greta Thunberg was seen to be a lady in a yellow trench coat or yellow sou'wester who seems to be driving that sort of trend for younger people. You could also identify geopolitical changes. Where do illegal migrants come from? They come from civil war zones, don't they? So you could probably say, okay, that will lead to a flood of potentially very cheap but unaccredited labour. I mean, in the case of the UK, the so-called migrant crisis is front page news, and you know, it's happening, and you can see it. Okay, so where are those guys going? They got no papers. They're getting off of rafts, the ones that survive, and they're going where? I mean, they're going into this economy, aren't they? You could also note changes in the law on employment. So you could say one of the problems you said was they're unethical because they've broken the laws on employment. So changes in the law on employment would actually presumably show us we've started to open up risk. Okay. You could also note source of other risks of the company, not just risks like exploited labor, but also things like economic outlook and some of the emissions and so forth. But why would it not be the right tool to use? Well, Pestel would be difficult to use because exploited labor was inside dark kitchens. Now, that isn't something a company can see. Okay. Also, Pastel isn't going to really spot things that are deliberately concealed. You know, if you're trying to do analysis of a problem, this is by its nature hidden. People trafficking is hidden. You know, there's not sort of people filling in forms saying how people they trafficked. Also, to recognize that risk can come from nowhere. They're very complex. Okay, so the idea that you've monitored all the social stuff is all very well, but the interrelation of that with the law might be rather hard to see. Now, I've done that particular question. I wouldn't say it to students because that is the question she's asked. Okay, and once again, it was badly answered. I thought she'd come back and ask one again. I'm not aware she's done so yet. Okay, so that's why it's in there. So one thing I'm hoping that you're starting to pick up with this examination is that it's actually tough. I can't say any other way, it's tough. Okay, yes, also I'm showing was part of the question sent to you. I sent you another email today with the solutions to mock examination 5. Okay, so just check your own email, you'll find it. It's in there somewhere. Okay, so it is a tough paper and you can't really spot learn your favorite topics, hope they come up, because there is no optional questions on your exam. This examiner has set 6 exams on the basis of Snakwheel. Okay, each examination contains, what's it going to be? 3 twos, 6 subtasks. Okay, so just multiply 6 by 6 and you get the number of subtasks she's got. Yeah, what's that going to be? 36. Okay, 36 subtasks she has written based on Snakwheel. Okay, they're not all going to be on SWOT analysis, are they? Okay, they're going to be very searching. Okay, so what you need to do is apply yourself to as many questions you get your hands on. Okay, and do it blind. In other words, don't read the solution and look at the question and convince yourself you could have said that. Confront yourself with my question and any others you can get hold of and go, okay, before I read the solution, how the hell would I do this if it came up in the exam? I've got no idea. And as I always say to you, apart from the 5-stage approach, I've also deliberately said to you, okay, if you get a question asking for your opinion, it becomes on the one hand this, but on the opposite hand that. On a conclusion, they take you a long way. Also, be very careful how you read the question. A lot of you are answering a question about how would you mitigate those risks. It's not relevant to a question asked you. How do you evaluate them? How do you work out if they're big or small? Put a value to them, not how do you fight them. Okay, markers will give you 0. If your answer is just totally mitigating the risk, I'll give you 1. Okay, but they won't give you much. Right, let's move on to a new topic. Let me just pick something I want to do because you guys were asking quite a few things, weren't you? I won't do much or anything at the moment from mock examination number 6. Because I think we've done the topics in there, stakeholders and so forth. I think we've done those. And in a course that's actually got limited amount of time, I think we're probably better off going to mock 3 that I sent you. Okay, so here's mock examination number 3. And I think we'll do this one. I think you're going to find some topics in there that you'd like to see how to do. Okay, so again, please help me out by using my 5-stage approach. Okay, so breaking it down, making sure you've got the answer right. I mean, if you type down evaluate risk, it might stop you from answering it wrongly, mightn't it? Okay, stop the trigger word. Stops you. It's that topic, it's that question. Because if you type out heading, you'll realize, oh no, it's not. It's a different question. Okay, so let's go to section number 1 then. Okay, so off you go. Go and get your document out and start planning some answers to mock examination number 3. This is what I want you to do after the session finishes today, all the way through to your final exam. I want you to spend a lot of time doing exactly what you're doing now, looking at a question and going, okay, let me see how I'd answer this. Okay, look at the question for a moment. Does the question say list the environmental information we should gather? When it says evaluate, what's it mean? It doesn't say list or describe, it says evaluate. What do you think that means? Value of. So how would you, so you pick a piece of environmental information that you should gather. So how are you going to express the value of it? I think perhaps you're moving to the second question there. How would you evaluate a piece of environmental information? It's the value of it. So what you would presumably say is, well, what you hope that environmental information might tell you. So the relevance listed item is the way to think about it. But I think the way to evaluate it, its value, you'd be saying, well, we need to know this because this information will be useful because, again, I'm seeing things coming, worrying me. You know, this is not. Are you answering the first question with your mission? Because that doesn't really talk. I'm talking about the environmental information question here. I don't see any role for mission and values in that at all. Okay, environmental information we should gather. Not every question in the exam's a mission statement question. This is not a strategy evaluation question number A. It's environmental information. What would you find? So you're thinking about, well, you say 5-Force and pastel, but it's not a question on 5-Force and pastel. It's a question on environmental information. Now you may use the headings in your head of pastel and 5-Forces to kind of get some ideas. You might equally use Porter's diamond to say, okay, it's a foreign development, so therefore presumably, okay, some of the things in the diamond might be useful. So it's kind of there, okay, but don't immediately jump to, again, I'm seeing all kinds of things that are worrying me. Why have you got suitability in here? Yeah, okay, good. It's not about evaluation of strategy. It's evaluation information. Some of you would probably get low marks jumping to sort of the wrong stuff. Okay, this is section B of the syllabus. Environment of the business. It's not section A, develop a strategy. Okay, so before you decide to go there, what information would you gather and why are you gathering it? That is the question. Okay, sometimes worthwhile putting the question in different words. Okay. So there we get some ideas. Now, I'm not sure value of expansion. I think I'd start off with what information do you want? So you say government acceptance of foreign companies. That is the thing you want to gather. Okay, good start. And then you'd say, well, okay, why is that useful? Well, because we know that if the government accepts us and gives us loans and things, then it's going to be more successful. But if they start keeping us out, making us work with foreign partners, put in ridiculous taxation after you put the infrastructure in, it'll lose money. There's your answer. That's the value of it. That's what you expect to find out. Okay, guys, so that's what evaluation means. Now, the second question, how are you going to structure your answer? It's 20 marks, okay, but how will you structure your answer? Okay, so it's a pros and cons question, isn't it? Yeah, this is strategy evaluation. Okay, so I think you've got to choose. Either you're going to say it's the benefits and drawbacks of doing our own business, in which case you'll be contrasting the benefits with the drawbacks of buying this company Eat Fleet, or you will say benefits and drawbacks of buying Eat Fleet compared with the problems of doing it yourself. I don't think you've got time to talk about the pros and cons of doing your own business and then come back and then do the pros and cons of acquisition, because I think you're going to get yourself into a mess. Because there'll be a lot of repetition, won't there? Okay, for example, one of the benefits of buying Eat Fleet is we get there quickly. One of the drawbacks to ourselves is we don't get there quickly. And marketers are going, yeah, no shit, Sherlock, really. Okay, I think you pick one of them, like debt versus equity. You pick benefits, drawbacks of debt, and in so doing, you're referring to equity by implication. Okay, so I think you structure it that way. One of them. Okay, I wouldn't do both. You wouldn't have time. Okay, I think if you look at that mark allocation, that is not going to sustain a good set of reasoned arguments. I think you're much better off saying these are two opposing opposite possibilities. So I'll evaluate one of them, and in so doing, make it clear I'm saying, but this wouldn't be a problem if we were to buy Eat Fleet. So you choose which one you want to evaluate. Okay, so in my answer structure, in terms of my initial plan, okay, I decided I would go with environmental information for expanding to the south. And how many pieces do I want? How many pieces of environmental information do I expect you to talk about? How many paragraphs am I expecting? 5, right. Okay, how many benefits from acquiring Eat Fleet do I want? 5. And how many drawbacks do I want? That's right, 5. Okay, let's see if we can do it. So I'm going to give you a couple of minutes now to pick 5 pieces of environmental information that you think they should have. Now, we just did one just now. Okay, so I'll show you what I want you to do. What I want you to do is to say government policy. Towards foreign firms. Right? That's the information you want. I haven't asked you how you're going to get it. I just asked you what would you collect. Okay, and then you say, why do I want to know that? What's the value of that? Okay, gain grants versus, okay, taxation and restrictions. So I'm going to say the benefit is we'll know in advance what grants they might give us. It makes it more attractive, or we can see that there might be a danger of taxation, restrictions, even nationalization of our company after we put all the money in the ground, kind of Vladimir Putin thing. Okay, so do 4 more for me, please. And you might be thinking, anything pastel, 5 forces, anything there, Port Diamond. But I want to know why you want to know it, each piece. I want the equals. Why? What's the value of that going to be? So when you wrote availability supporting industries, which is straight out of the Port Diamond, I understand it's a very good point. But what supporting industries are you looking for? 2 examples relate to the case. What supporting industries do you think our company needs to have, and why are they important? Yeah, but you're all putting down the information, okay? But only one of you so far has told me why you want it. Okay, it's evaluate it, not list it. So I'm asking you to put the equals in. Why do you want it? What is the value of this? You can collect information upon the number of left-handed people in the economy if you wanted to, but I can't imagine why you want to know it. So not a random list of environmental stuff, but well, why do you want to know that? What is the value of this? I sound just like my lead marker. I could sound just like her then when we're doing the moderation meetings, and she is pretty senior in the SEMA process. And she says, but they have to say why. Otherwise, it's level 1. Righty. Okay, so yeah, you've got to say why. Why do you want to know it? Piece of information, and why do you want to know it? Okay, loads of good ideas up there. Okay, we managed to steer away from the wrong answer now. Thank goodness, all the new contributions are bang on. Okay, so a lot of you are very interested in the state of technology, aren't you? Now, don't just go pastel, don't go political, economic, social, because otherwise there's so many things under political, so many under economic. Okay, just find one. Okay, so you've been saying information systems infrastructure. Okay, in Southland. Okay, so that's a good one. What do you want to know that? Okay, so we depend on it all and blah blah blah. Yeah. So what will it help you do? It might identify initial target markets. You're not going to open up in the entire country all over, are you? To go where the communications are going to be. Okay, I've just made that one up, and I sort of do a lot of that. Just okay, so let's think of why somebody wants this information. Something else, please. Okay, so you've got some technology for electronic payment systems. Why? Well, because it will affect our demand, or alternatively, we might have to change our business model to accept cash. Okay, when Amazon went to Russia, Russians don't like banks because they thought they're all state-owned and corrupt, and they said we have to pay cash. So Amazon had to change its business model to actually collect cash in sealed envelopes that the courier could not open without tamper. Yeah, otherwise they couldn't actually sell. Okay, so it's good when you can actually put the example if you wanted to, couldn't you? Okay. And if you want to sort of, there's not much information about Southland in the actual case itself. So you can imagine a country that you think is very different from Westari. Just talk about the things that might make it different. Okay, so we've also got things like competitors. Okay, so that comes straight out of the Porter's 5 forces, doesn't it? And why do you want to know that? What's the value of that going to be? Affects cost of entry. Initial promotion costs. Okay, eventual levels of sales and commissions. Again, all the time using the phraseology of the case. Okay, it's not prices, it's commissions. We don't charge prices, we charge commissions, remember. Okay, and so on. Okay, how many fast food companies are already affiliated to a courier? Okay, although the case does say there's only one, doesn't there? So, but yeah, how many have they got? Okay, what else you got here? Yeah, GDP. Understand how rich the country is. Okay, because fast food is going to be more expensive probably than some home cooking, okay, or whatever. Yeah, somebody said tastes of people. What do they like? What do they eat? Why? Well, because that will help us to understand how much how much delivery problems we're going to have, or what restaurants we have to actually partner with. Heaven forbid you partner with McDonald's and find out people don't eat burgers because they don't eat beef or something. Okay, rather a lot of generic phrase about barriers to entry. But what do you mean? What barrier are you talking about? Otherwise, you just pull something out of a book. What barrier are you talking about? Yeah, so you've got very, very specific. Okay, is it worth going in? I don't think that's environment. Okay, so you've got a few, what you're doing is much better. Okay, but what you're not doing, most of you are still not telling me why it's valuable. You're still very close to listing and describing information, but not evaluating it, not telling me why it's valuable. Now, I wrote this question, I did it deliberately because people do what some of you did. You see the word evaluate, and you think it means pros and cons, which of course often it does. Okay, for example, about to come on to one of those, evaluating a mode of entry, pros and cons. Okay, but this one means what is the value of? Okay, so be careful of questions that say to you, evaluate something, but it isn't actually a decision. Okay, you're trying to talk about evaluating a risk. Okay, it's not the pros and cons of the risk, it's how big is the risk. Okay, so evaluation's got two meanings in your exam. It is evaluate pros and cons, or it is tell me what is the strength of this thing. Okay, let's move on. I think the problem some of you've got, if you didn't have time to look at the actual reference material, because it does tell you there's only one fast food company in the country. I think maybe before we get onto this, though, I think you need to give some time to read that, otherwise we're all over the place. Okay, so what I want now is I want some specific benefits, okay, of acquiring this company, okay, with some reference to things you've just read, okay, and other things. Now, before we go further, there's one thing that none of you did pick up on, okay, which was political stability. Following a change of government and national elections last year, okay, it's got a new policy accepting investment in the country from outside and allowing outside business to set up or buy business inside Southland. Okay, what do you want to know? How stable is that government? Yeah, that country had to be Miramar, yeah, which did have a government change, tried to open it up. Now actually, well, one was assassinated recently or executed by the government, and the other one's back under house arrest. You know, you want how stable it is, as a thought. Okay, it's a bit of a hint given there as to what one thing you should have mentioned. And the examiners do that. They will say you should have mentioned a thing that was heavily hinted at. Okay, now we've got the things here that have got lots of heavy hints in them. Okay, very, very heavy hints. Okay, see how you get on. Okay, can you spot any hints as to pros and cons of this company? We'll read. They're not all in there. It's not like an English comprehension exercise from school where you find sort of 4 animal images and 1 reference to love. You know, it's, you know, you've got to say, well, that's some things, but I've got to think more generally. So you want to go to the country. If you do decide to go to the country, okay, what would the benefits be of doing it by, I went for acquiring this company, okay, which, so the answer I'm going to get is the opposite, I suspect, of the people who were going to actually evaluate doing it yourself. Okay, either's okay. So what I want from you guys is some benefits from acquiring Eat Fleet. Well, thank you, Moses. Gold star, mate. Okay, so why is an existing market share good? You're right, okay. So you put down Eat Fleet has an established market share. Okay, so why is that a benefit compared to doing it yourself? Again, it's the same thing, it's got a footprint, but what's the benefit? Okay, so you can grasp the opportunity immediately before someone else can get in. Okay, therefore your long-term profitability is higher. Okay, familiarity with the location, easy takeoff. Okay, so it's familiar. Southland, I think they're saying, isn't it? And the market, not the location. We're talking about something very specific here. Okay, and what's the benefit of that? I will say it reduces risk. Unfamiliarity to me is risk. Okay, so yeah, okay, Dan, that's right. So what else have we got? What infrastructure does it already have? What infrastructure does it already have? You don't mean telecommunications, do you? What do you mean? You're going to say it's got couriers? Okay, why is that a benefit? I'm going to say because it's going to be very, very hard actually to get in without buying them. They've already sewn it up, haven't they? So that's actually an argument against doing it ourselves. Because actually it's going to be tough. They've already signed up the restaurants. He says that. He's already got the couriers, already in the towns. Okay, any other reason we want to buy it? I think, again, we've got some very strange finance going on. I've heard it's cheaper. I've heard it reduces financial risks. Actually, incredibly risky and be very expensive. Okay, buying a company is never cheaper than doing it yourself. Okay, because you're going to pay the person the present value, their future profits. Any other ideas? Why else are you going to buy it? 1, 2, 3. What else you got? Well, has it got necessary licenses? For example, okay, therefore quicker, cheaper. Quicker and more certain. Whereas we'd have to go and get them, wouldn't we? Okay, any other benefits? I'm going to say you've removed your competitor. Therefore, better long-term earnings. Because if you get into a competitive war with somebody, then everyone's going to lose. And we put some promotion together, you can fix the prices, and so on. I'm not sure, Moses. I think what you're talking about there is the benefits of going to Southland. And this question is not about the benefits of going to Southland, the benefits of which way will you go to Southland. It's a mode of entry. If you decide to go there, you've got two choices. Which would you choose? It's not going to Southland. Okay, I think that's outside the question with respect. I know you're strong enough to take feedback. Right, so what sort of drawbacks are there to buying Eat Fleet? Culture clashes between two sets of management across different countries. Okay, what's that lead to? People go home at night and cry. That's not a reason not to do it. What? So staff will leave. The founder may leave. Obstruction. Refusing to work with you. Being downright pig-headed. Okay, good. What else do you got? Paying for a poor company. Yeah, I mean, how would you value a company on the basis of what it's going to do? Okay, he's going, I got 5 more cities I'm going to go to, and I want you to pay me for those. Danger of paying too much. Okay, I'd say a lot of Eat Fleet is promise, not actual earnings. Okay, so how do you actually know what it's worth? Okay, what else you got? Okay, so a good one. You may have IT systems compatibility problems. Its systems. I can also stop the autocorrect. I mean, its systems compatibility. Now, what some of you are doing now is you're utilizing the slide pack. Great, good. That's something you can learn and not have to go through this awful thing of trying to invent things in your head. Actually, most of it's actually in one PowerPoint. Okay, we talked about on Monday. Okay, last time we were buying Munchbite, weren't we? This time we're buying this guy. It's pretty much the same. Okay, IT issues. Okay, why is this? Okay, well, obviously they'll have different apps, workflow systems. Okay, so either maintain 2 different systems, which you could do, times 2 costs then, or, okay, integrate, which is expensive and slow. It's slow, costly and risky. Of course, a bit later on, the question will be, what are the risks in integrating the systems? Okay, how might you lose data? Okay, any other reason? I'll look at that. I think we've done that down. We talked about culture clashes. I think you'll be end up saying the same thing twice there. I realize you're responding quickly. Anything else? Inherently, it may be inefficient. So yeah, okay. So you may say then that Eat Fleet may be inefficient. Why? Why did you pick that point? You're on the verge of a really good point there. What about Eat Fleet makes you think it might be? Startup, isn't it? It's a startup. So consequently, are startups well known for their mature and efficient systems? Or are they all making it? He's growing really fast, isn't he? Okay, it's fast growing. Startup equals weak internal controls. He's building a business. He's not trying to control it. Anything gets him money, he'll go for. Picture him, this guy set this thing up. He's very excited. One first of a new breed of entrepreneurs in a country that's pretty regulated. You know, it's a disaster looking for a place to happen, isn't it? Okay, one more. Okay. If you buy, I will go with the one you got there, forget, which is this is a very, very high capital requirement. Okay, basically you have to buy its lifetime earnings. In one lump sum. It's a huge capital requirement. Whereas if you went into the country, you just have to buy, you know, an office. Gotta be cheaper. When you buy a company, you don't buy its assets, you buy its earnings. Okay, so you actually just given this guy all the money you hope to make. How's that ever? And it's huge. So what's our conclusion? Well, it's above your salary grade to say yes or no. The other thing I noticed when you said, and Morpheus mentioned there, you know, acquired risk, so-called contingent liabilities. You'll pick up all these unpaid taxes and all the litigation from good point. Unseen commercial claims to Andy. Okay. So I think what you say is, okay, conclusion, we need to look into these things more. What you're actually doing, you're just purely speculating, aren't you? That might be a problem, that might be available. You're purely speculating. These aren't facts, they're just guesses. You're just one person with an opinion like me. So what you say, well, is it true? Do these things actually, are they going to be compatibility? Oh no, it's the same software we've got, no problem then. Are they inefficient? Yeah, terribly. What is that amount of money going to be? Okay, actually, is he going to have to be paid a lump sum anyway? Can't we just give him shares in Snakwheel? Okay, so you need to look into it. I don't think you can say yes or no to either option. But again, I did feel some of you are inventing your own question. Okay, you looked at that and thought it's about going to a foreign country. It's a question of whether we should go or not. No, it is how you go in. Okay, develop your own business or acquire one. Okay, it's not about whether you go to Southland at all. Okay, let's bring on to the next part then. Okay, so let's really focus on this one, guys. Okay, and make sure we get the right answer. Well, that involves getting the right question, doesn't it? So one of you talked about foreign exchange risks. They'd be the same whether you bought that company or you bought it yourself. Okay, exchange risks are exactly the same. It's not a deciding feature between one option or the other. It's just someone's gone into another thing of the benefits and drawbacks of foreign expansion answer, which it wasn't. The examiner asked that very question in May 21. Okay, and a report said too many people did not realize that these were two ways of going to the country. Okay, so I want to know what your answer plan is going to be. Have you spotted all the parts of the question? I'm typing while you look at it. Okay, step number one, don't ask me to roll down the question just yet, because you've got some work to do. You've got to actually work out what questions you're being asked. Somebody asked for business valuation. Here it is. So my answer structure is this. Okay, because the second one, and, didn't it? What foreign currencies are there? And, okay, how can you manage foreign exchange risk? What's this thing about is the interest rate relevant here? Okay, is that a question? Well, it is. I've got a question mark by it. Is it a separate section? Okay, so we deal with that as well, don't we? Okay, now I just want to make a point about going after these questions. You do need to understand what the question is asking you before you try to answer it. And some of you are having problems doing that. So I think what you need to do is you need to take the mocks I'll be giving you and actually sit down and decide before you turn in the back what you think that question means. And try to decide, okay, it means this, and therefore these are the kind of approach I'd make. And if you look at the solution at the back, it's completely different tangent to yours. Ask yourself, Is that an alternative valid answer, or did I, meaning you, misunderstand the question? Okay, because if you go in the examination room at the end of August and you misunderstand the question, I mean, you know, you're not going to get many marks, are you? So understand the question is a really important first step. Okay, some of you are kind of you're kind of thinking it's a different question. Okay, and I think that's what the examiner herself calls the trigger response. That you see something, you think, oh, it's a question on that. You just don't read it closely enough. Think, oh no, it's not. It's not what are there, is how would I evaluate them? Okay, it's not shall I go to Southland, it is which method is the better way to go to Southland. Yeah, quite different. Okay, so valuation of Eat Fleet. What methods are there of valuing a company? Okay, what methods are there? Okay, good. Okay. Although you say discuss at least two, I think you discuss them all. There's four, aren't there? Plus one, I think. 4 plus 1. Okay, discuss them all. But bear in mind, when you do that, okay, you have to actually point out the limitations of the ones that are no good. Okay, now what this company is doing, okay, look at the way I put the question together. Is there a spin in that question at all that makes you think, Is there any of that question that's bothering you? Is it a straightforward question of, okay, how to value it, or what's it asking? Well, simple point is that starting your own business will always be cheaper because you're paying the asset value, not the future income value. But is that really what they should be considering? So when you start talking about that, you need somebody to say, well, but boss, you know, we just talked about why we want to buy this company rather than you know, we must recognize that it's not just about the asset values. Yeah, and how much it costs to hire a member of staff. You're trying to talk about what's later on will be called goodwill. You know, the relation, the customers, the brand, the government influence, and so forth. And that's impossible to value. How would you ever know? Okay, so what methods are there? Well, you start going through them. Okay, have a read now then. So the methods are net assets, or fair value, as one of you called it, but please call it net assets in this exam, okay? Fair value is not a phrase that CME uses. Net assets approach, then you've got dividend approach, then you've got this kind of PE of earnings approach, and finally you've got the present value of future cash flows approach. Okay, so you have to go through them, okay, and as you mentioned, you literally one sentence explains each one, and then you've got to get into, well, okay, I'm going to reject several of those for the following reasons of being perhaps impractical. I think it does ultimately lead you to the PV of cash flows, I've got to say, but why wouldn't the other ones be any good? Okay, foreign currency risk of your subsidiary and how can you manage them? Okay, let's read through the information now in the actual question. Okay, to see if there's any clues on valuation and that sort of stuff. Have a read. Also, foreign currency risks. Value a tech startup. So what's his net assets? Negative. What's the present value of future cash flows? Big negative. What's the PE of future earnings? Well, it's making losses. Perhaps he'll give you money to have his company then. Okay, so basically the company does not have any of the things you want. You describe the technique, but you say, well, the problem here is going to be, okay, the company's got negative net assets. If it owes 25 million, it's got assets of 8 million, it's got negative net assets. If it's got losses, then what on earth are you going to base your calculation on? And that does lead into the foreign exchange risk. Okay, guys, let's go. So if we're going to take a look at the net valuation of the company, okay, what you're going to say is, well, there are many ways to value a company. Now, I know you wouldn't do that necessarily in the real world, okay, but in the exam, you are still taking an exam, you're being tested, you know. Can you put them down? I hate the way it's people call it fair value. It makes you think the accountants actually know what things are worth. Okay, net assets or fair value approach. Okay, so what that's going to be then? Okay, what's the logic of doing it that way? Okay, well, this values the physical assets of the company of who? Eat Fleet. Not the company, a company, and so forth. The value of physical assets of Eat Fleet. Okay, so basically to be compared with the cost of buying the assets new. So the alternative is go and buy the assets, don't we? Okay, what's the problem with that then in the case of Eat Fleet? Well, you're going to say it's got negative net assets. What else do you say? What else is the problem with that technique in this situation? Why is net assets hopeless for tech stocks? If you're trying to value a coal mine, net assets is perfectly okay. A forest, perfectly okay. Okay. You say nothing to buy apart from the negative net assets. What do you know? Okay, well, one thing you're saying is that's the one I'm looking for. That Eat Fleet and companies like this are not asset intensive, apart from in your examiner's case study. What's the main value is what? The main value is the platform. I mean, I know you see brand loyalty and customer name, but you've forgotten the restaurants and the couriers. It's the platform. On Monday, we said, what drives the value of the platform? We said, well, it's the interconnections of all the people that use it. That's what makes it valuable. The fact it's at the crossroads to these people. Okay, so that's the hard bit. There's no value for that. That is the restaurants and the couriers, and it's going to be the customer they've already signed up. Okay, and that's all not going to be in that figure. Okay, so what's the problem with that technique really? What's the ultimate problem when approaching Marlon Trower with a price based on net assets? What is the problem going to be? You'll laugh you out the room and say you're not serious. Are you serious? Okay, when you get acquisition, it's very important to make the other guy think there's actually a deal possible. Otherwise, he's a busy man. He's not going to bother wasting time with you jokers. Okay, so right dividend approach. I'm not going to bother describing it now. I'm going to give you my solution. Okay, what I want you to do now is say, why is that flawed? What's the logic of dividend approach? Well, the logic is that you are trying to compensate the shareholder for what they actually will be getting. Okay, this company is in a horrific negative cash flow situation. So Amandeep nailed it. Very unlikely to be paying a dividend. I can't imagine a bank funding the kind of figures you see there, but letting him take a dividend. He'll be given a basic salary and fed on bread and water, I thought, until he sorts his company out. Very unlikely paying a dividend. So therefore, you're valuing nothing. Okay. Being quoted doesn't matter. Private companies pay dividend. I wouldn't be able to afford to eat and live. Okay. So I don't know why you think that a private company wouldn't pay a dividend, because they do. Okay. Very unlikely paying a dividend. Okay. And the next point is, obviously, the benefit to him is the capital growth of the company, not the dividend anyway. Okay. So Marlon Trower will focus on the capital gain he made. Because he's a startup. He's not some old widow who's got a few shares that she, uses the money to sort of, pay for the cat food. This guy's actually, this is his chance. This is a unicorn. This is a unicorn we got here. This is a young Elon Musk you have here. Okay, so I'd say it's just not acceptable again. Okay, that's what I always do. There's a reason I always put that in there. Okay, because I'll make a point at the end of it. Right, so now you're going to have the PE approach, aren't you? This is the one where you sort of take its earnings, that's its shareholder earnings, bottom line earnings, and you say, okay, what you're trying to do, again, you do explain it, even though it's the most ridiculous one to do. Why would that be relevant? What you're trying to do is assess the value of Eat Fleet in an IPO, initial public offer. That's his other exit route. If he wants cash for his company, how's he going to get it? Well, if he doesn't sell it to you, he'll do an IPO sometime. So you're trying to work out what he's worth an IPO, not because you intend to buy a company in an IPO as an alternative. What you're doing is you're saying, well, that is his alternative. If you can offer enough money to say, look, why don't you sell it now? That's all you're going to get. If you sell it any other way, then he may accept it. Okay, equals its benefit to its owner. Now that's what he'll get. He'd have an exit route in his mind, I'd have thought, by now. Okay, where's your problem going to be? Well, obviously, it's got no earnings. Okay, what's the other problem? There's no point in using this technique if the company's already quoted, because you'll end up with its share price, won't you? If you take its PE times its earnings, you'll get its share price, which is just a circle. So what's the other problem going to be? In a brand new country, only just started up. Okay, you're the only company in the country. What's the problem? No benchmark. There's no PE you can use. Okay. No other firm. How similar is Southland stock market to Westaria? Because P ratios do require an efficient market. That's what the case study starts off by saying. So if the market's not efficient, the price is rubbish. You can't use your own PE because you're a completely different company, different country, different stage of your life cycle. Okay, different regulatory structure around the market. Okay, nothing available. Okay, so you're now going to come to the PV of cash flows. Okay, so yeah, that's the efficient market value of a company. What is going to be the problem? Okay, so the idea of this is this will compensate. What's it called? Marlon Trower, MT. Okay, for the company he sells, because he owns the entire cash flow of the company. So that, whatever it's going to be over a period of time, that is actually what it's worth. Whether it comes as dividend or capital gain doesn't matter. That is exactly what it's worth. Okay, where's your problem going to come in with that? Well, cash flows are unpredictable. At the moment, they're negative. Yeah. And the other problem is going to be that basically this gives all the value to MT and leaves nothing for SW. If you're giving the future cash flows of the company for the company, then what do your shareholders get then? If you think future cash flows are worth 25 billion and you give him 25 billion, then your shareholders get nothing. It's given 25 billion to earn 25 billion over a period of time. They don't gain anything. Okay, so what was the question exactly? Question was, how can we value it? How will they value it? Negotiation. Always the answer in her questions. What's the right price? That's one question asked. What's the right price for the company? How would you value the company to get an agreement? Okay, always to say, look, it's no good you coming along and valuing the company using techniques that you want. What you've got to recognize is ultimately the other guys can have their own values, aren't they? You'll be working on a low cash flow, he'll be going for a high cash flow. Okay, you'll choose a low PE comparator, he'll choose a high PE comparator. You'll choose net assets, he'll tell you all about the things you've missed. Okay, ultimately it'll come down to negotiation in which you make an offer, he says no. He asks for a ridiculous amount of money, you say no. And then you kind of split the difference out in the middle, don't you? And also, you might decide in terms of valuing the company that actually, because it's so uncertain, you might not try and value it now because you say, well, we'll give you some money to start off with to buy an equity share. And then as it becomes more valuable, we'll buy more of you out. If it fails, well, then we've got a small investment. So I don't think I would buy it for cash, to be truthful with you. I think I'd say to him, we'll take an equity share in this one. Okay, and if it goes well, then we all get rich. Okay, maybe we'll buy you out more, okay, in the future. But if it doesn't work, well, we've lost a small equity stake. Okay, it's much safer. Okay, that gives us the valuation technique. By popular demand then, foreign exchange. Okay, foreign currency risk and subsidiary. Okay, what are the three? If she asks you to do a question like this, okay, where she's actually asking you to what foreign currencies we incur. Okay, it's much safer to give the 3 foreign currency risks before you go any further. Okay, and what you have to try and do, even if one doesn't apply, say, but it doesn't apply. Okay, because the danger is going to be you'll be penalized, don't mention one. So what are the 3 foreign currency risks? Those who've done your preparation will have seen so many questions from her with these 3 risks in them. Okay, some of you said transactions risk. One of you said translation risk. What's the third? Economic risk. Okay, will there be a transactions risk here? So I'm making the assumption you know what a transactions risk is. It is that the money you spend may cost you more or less in that foreign country as you come out of West Aria because exchange rates changed, or the money you earn will be less in West Aria dollars because the exchange rate changes. That's a transaction risk. Can you see any transactions risks? Where are there going to be cross-border cash flows here? Look at the question. Where will there be cross-border cash flows? Now, don't say in the purchase of it, because the question seems to imply if you operate a subsidiary, whether you buy his company or you set your own up. Yeah, I want to know where the cash flow risk is, first of all. The interest rate isn't really part of it. Okay, we'll come to it later on, but leave the interest rate out of it at the moment. Where's the transaction risk? Okay, so I'm liking what you're saying, that receipts and expenses may be within Southland. This may not cause a transaction risk. We're quite right. So there's no transactions risk on commissions and costs. Okay, why? Because they're all in Southland. But do you see any money going out or coming in? Well, you said repatriation of profit, correct. Subsidiary company paying dividend, there's a transactions risk on the repatriation of profit, but also you're quite right, it's lending it money. Okay, because making losses, who's going to subsidize it? Won't be running profits to begin with. And then, you're quite right, risk on repatriation of incomes from EF, or say subsidiary. It's not, you know, which we're going to go for, do we? Okay, so this company is going to pay 3 or 4 years, 5 or 6 years of basically subsidy to get their subsidiary successful. And after that, they're going to get transactions risk because they try to remit profit back to themselves. Because group company is going to need some profit from it. Otherwise, it's a waste of time, isn't it? Okay, that's nothing to do with tax. I'm not saying repatriation problems with withholding tax. I'm just saying the exchange rate will change. So how much you will get back, okay? Translation risk, what's that? Translation risk. What's translation risk? It is the Southland dollar to Westland dollar, but what are you translating? You go on holiday. Yeah, the assets and liabilities of the company, okay? It's the impact on the Westland dollar value of subsidiaries assets and liabilities at year end. Okay, so the idea is, just makes it absolutely clear, the operating currency of subsidiary equals what? Southland dollar. But reporting currency of Snakwheel is what? When you consolidate, you're going to consolidate a foreign currency. Okay, now, why is that a risk? Where's the risk? Sure, it's just a paper change, isn't it? You know, come the 1st, 2nd, 3rd January, it'll all change. Yeah, we know the exchange rate's going to fluctuate, but where's the risk to the company? Why is that going to cause problems for our company? Not a loss. Not selling them. Possibly unrealized gains and losses. Basically, you end up with unstable asset values in SW. Therefore, we get a problem with shareholder perception. Gearing, that will change. And impact on the equity account. If assets depreciate due to rate change, exchange rate change. Oops. That's the problem. If you see a fall in the value of your subsidiary's assets, you've got a reduction in your assets, you must reduce your liabilities by the same amount. You can't reduce your bank debt, you've got to reduce your equity. It's written off against shareholder equity, which then, of course, causes the gearing to go high, shareholders start asking questions. Okay, that's translation risk. Okay, economic risk. This is the possibility that the exchange rate change will affect actually the demand for what the company makes. What might be the problem? Economic risk. Okay, so I'll just make sure you know what it is. Okay, impact on the business model of subsid due to Forex rate changes. It's going to be minimal, isn't it? Because are people going to suddenly go, oh, look, the Southland exchange rate's gone down, so I should now go and eat my meals from deliveries from Southland? Or if it goes up, or people will go, oh, I'm not eating Southland anymore, I'm not going to go there on holiday, I'm going to go somewhere else. It's going to be pretty minimal, okay, because you're only delivering in short 10-minute bursts. It's not an import-export industry. So minimal, really. All right, I know there's some land border somewhere that's got different exchange rates, one side and the other, and people are whizzing across it to go or demanding the couriers come across the bridge from one country to the other. I'm sure, okay, but I don't know where it is. Not that it really matters. That's the three risks. Now, does the interest rate make any difference? I'm going to go to the top to answer that question. Why is the interest rate significant here in relation to these risks? Again, the risks I'm talking about, the risks. Interest rate affects transactions risk? Don't see it. Affects it. What does a high, okay, now we're getting there, forget. Yeah, okay. So a high interest rate indicates two things. Okay, the so-called international Fisher effect, which she asked a specific question on once. Therefore, what's going to happen to the currency? High inflation, what will happen? Some of you are all over the place. It's a question of foreign exchange risk, not upon the cost of capital. Therefore, the exchange rate will devalue. It's saying depreciate, actually. Devaluation is you've got a fixed exchange rate and government changes it. Okay, so high interest rate indicates high inflation, therefore the exchange rate will depreciate. Okay, that's one important element. So that probably, okay, indicates that the currency is declining. Okay, so therefore, the transactions risk is going to be that the money you lend it out will be actually, it will become an upside risk. A certain amount of Westland dollars, okay, will buy more and more and more Southland dollars. The only thing is, if you're having high inflation, you're going to need more money to pay. So I don't know. In terms of translation risk, is terrible. All your assets in that country will be falling in value all the time if that exchange rate is going down, which it will be. Okay, so how can we manage the foreign exchange risks here? Again, let's look at the question. And then we have to make a little stop. Okay, so how can we manage them? Okay, now, what ways do you know of managing foreign exchange risk? Go from the top. Okay, it's a list you have to learn, isn't it? Okay, what's the first one? Hedging is not an exchange rate management technique. There's so many methods of hedging. Okay, right. So things like a forward rate agreement is one such method of hedging. Okay, again, I'm worried, guys. This is kind of like it's really 101 stuff we got here. Okay, currency options, foreign exchange agreements or contracts sometimes called. Okay, all of those, take a loan in the borrowing country. I take it you mean currency swaps, right? So you've got all these wonderful things here. Okay, you've missed two. One is pricing in home currency, which is impossible here. No one's going to pay for their burgers and God knows what in Westland dollars, are they? So you forget that. Okay, leading and lagging invoices. The problem with that is going to be you are the person that you're not paying. That isn't going to work. The only foreign currency bill they have to pay is to yourself. Okay, so we're going to get into the other stuff, aren't we? Okay, so the first one you'll normally go for is the so-called real hedging. Okay, real or natural hedging. Okay, difficult to see how they're going to do that here. That means you've got to like buy stuff in the currency that you earn your income in, but it hasn't got transactions risk of that sort. Okay, it's not like a car company who is building in Brazil. Okay, and it's frightened the German parts become very expensive to buy, so they just stop building the cars in Brazil using Brazilian parts. Okay, you can't do that. It doesn't work here. This company's not got a transaction risk in its own country. It's only on that. It's only on the loan you give and the income you receive. How are you going to hedge that? Okay, what they could do is do a foreign currency money market loan. So I wouldn't bother even mentioning the other ones, because how are you going to apply it? Just how could they do it? Okay, basically what they do is they would raise the S dollar subsidy in S dollars. And then what they would do is they use the incomes from the subsidy to pay the loan interest. Okay, why is that hedging? You've now got certainty on the amount of the subsidy. In W dollars, you know how many W dollars it's going to be, because basically what you've done is you've either raised a loan in that country. Okay, you could actually just make a deposit of your own money. So you've got a money market account, basically. Okay, make a deposit. Okay, if you did it that way, so you put the loan out there. Okay, if you borrow it from a bank, okay, then that's okay as well. Okay, and then obviously the it will actually hedge or shield the net cash flows from subsidy, because they're paying the loan off. So one day, when it starts to make money, the loan can be paid off. If you made a deposit, it wouldn't be quite so successful. So at some point, you want the money back. What is the problem of borrowing money in this situation? We just said it's got a high interest rate. Very expensive to go to a country with a high interest rate to borrow a loan, wouldn't it? Okay, you'd be paying 15% interest on that loan rather than perhaps 5% at home. Okay, and the other point is the uncertainty of cash flows. How much are you hedging? When will subsidy have positive cash flows? These are very speculative. These are not known financial amounts. Look at what you're doing. You're subsidizing losses for an unknown period. And after that, you get money coming back in again. How much are the losses for how long? How much is the money coming back in for how long? Okay, so once again, this examination, a list of hedging techniques is okay, but the examiner keeps on asking you, under what circumstances would it work? Which do you recommend? Okay, so they expect you to actually think, okay, these are the cash flows, this is the business, which of these things would I use? Okay, we're at the end of our time, so let me very quickly look at the solution to give you some confidence that we're actually covering the things that you wanted to cover. Okay, so we're looking at the solution to mock examination number 6. Whoops. Okay, so if you recall, the first question was, sorry, no, it's number 3 we're doing, isn't it? Sorry, I'm getting tired. Let's get rid of that. Okay, number 3 we're doing that. One of the questions you're quite familiar just then. Okay, mock examination number 3. I will be sending you through a lot of stuff. I'm not going to send it to you all at once. So what I'll be doing is sending you through, I've sent you through mock exam number 1 and number 2 already. Okay, I sent that through to you after our Monday session, just to add to your sort of bank of stuff, yeah? I've sent you through mock examination 5 and its solution. I will send you through mock examination 3's solution. I'll also send you through mock 6 and its solution. So you've got 1, 2, 3, 5, and 6. So next one I'm going to send you obviously 4 to complete the series. Yeah. And then after this, I'll be in the weeks to come, I'll be sending you through mock 7, 8, and 9. Okay, the reason I'm not sending them all straight away is some of my candidates are still doing mocks number 7, 8, and 9, and some of my candidates are actually sitting listening to me right now. I'm not about to send them the solutions, but mock they're supposed to be submitting and having marked. Okay, so I'll have to phase what I send you guys, all of you, with the time scale of other programs. Okay, and also helps you to have fresh meat to sort of devour as they arrive, doesn't it? Okay, so in the evaluation, okay, of the environmental information, I went for stability of government policy, likely demand for fast food, strength of competition, infrastructure, structure of the restaurant industry. Okay, I also put in availability in the law on couriers and the availability of electronic funds transfer as possible others. Developing our own business, okay, my solution actually went the other way around. Okay, so benefits of our own business. Okay, so avoids paying too much for a firm, eliminates the need to integrate into Snakwheel, lower capital commitment, maintains the same management culture, reduces risk by allowing gradual development. I mean, honestly, the opposite of what we said for buying Eat Fleet. Drawbacks, okay, if you're in a business, doesn't limit competition, lack of market and country knowledge. We said both of those two. Maybe slow, miss the opportunity. One of you said that. Potential shortage of partners because they've already signed them all up, and a lack of super management to actually run it, which you say is experience. So I deliberately the other way around. Okay, here to show you, get the same answer, whichever way you do it. Okay, so in this solution, I took it as being, shall we do it ourselves? So I deliberately did the other one. Our plan was, shall we buy Eat Fleet? Okay, in terms of purchase of the company, net assets, dividend, PE, PV of cash flows, okay, and then the statement that she always likes to see, the price will need to be set by negotiation, because you can't use a technical valuation method and expect that the person's going to accept it. They're all wrong anyway. Okay, foreign currency risks, okay, once again, I said, okay, first thing is to say the high interest rate may denote declining Southland dollar. That's what the examiner thinks it will do, so that's absolutely fine. Transactions risk, translation risk, economic risk. So how would you actually manage the currency risk? I said, okay, you can loan the subsidies in Westland dollars, okay, because actually Westland dollar is becoming more and more valuable if the currency is actually dropping. Borrow the funds in Southland dollars we talked about, okay. Real and natural hedging to ensure subsidiary as far as possible buys everything it can from within Southland, okay, to eliminate as many risks as possible. Then you get into the ones you want to look at, forward rate contracts, okay, which I explain in detail in a way I would not normally do in an answer, but people just don't know what they are. Okay, it's an agreement with a bank, okay, for a rate set in advance. Absolutely fine, hence the forward rate. Okay, the problem is that do we really know how long we need the money for? The problem is this company is just a startup. You know, how long do we need to subsidize it for? And how much? Because once you enter a forward rate contract, you have to honor it. It's a contract with a bank. Okay, the dangers could be you hedge far more funds than you needed. If the whole business fails and you've got a 10-year forward rate contract against the Southland dollar, you'll be pretty sorry, won't you? Derivatives. I always say in my answers derivatives, but I don't make a distinction between futures and options because they're so similar in every single way when it comes to are they usable. Okay, there's no real point in making a big distinction about them. Okay, except to point out that if you've got any kind of uncertainty on when the cash flows are going to happen, options are better than futures. Because future contracts do tie the company into that futures position, and therefore they must need the money. Obviously, you can sell a futures contract, you will rather sign it, but the point is that if, in fact, the exchange rate moves differently than we thought it was going to do, it's not worth anything, and we have no need for the money either. So normally, in a situation of uncertainty, you would take the option. Swaps are not even worth talking about. We haven't got any reliable income stream to swap. None at all. Okay, they're for mature companies who have well-known liabilities and incomes in currencies. You wouldn't use them. Okay, so I'm going to send through some stuff later to you of solutions. Okay, and what's going to happen is, can we know your I'm not sure the information you think I'm going to send you, Amdeep. I'm not one of these people who produces great packs of information about the industry because, frankly, it's not worth any marks. A lot of tutors still do that. They still seem to be fighting the battles of a 20-year-old exam where people got marks for that kind of stuff. It's a waste of time. I put interesting information in my answers. Okay, I'm not going to produce a great pack of it. Okay, put your eyes on the questions, not some information pack. If you want to know about the industry, just do some Google searching. Okay, that's what I would suggest you do. That's what I do. But I do put stuff in the answers. Okay, but this is not the place where you've got to go and collect loads of information about all the companies of the world. Okay, you've got to answer. You guys need practice in answering questions, understand what the question is asking you, and getting the right stuff against it, not going off onto a tangent about what's going on in delivery companies around the world. Okay, because most of the marks of the exam are not strategy, are they? They are finance and risk. Okay, so the amount of strategic whipple waffle, okay, is quite limited in this exam. Okay, been my pleasure to have helped you. Okay, I will send you some more stuff through. Please do let me know how you get on. No, there's no more classes, I'm afraid, if you're on the free revision courses. You've had 8 hours of free tuition, so that, I'm afraid, is it. Okay, obviously you will be receiving a feedback questionnaire. Mr. Simmons is my father, Michael. Okay, I'm Adrian. Thank you. Okay, so you are going to get a feedback questionnaire from SEMA itself, Miss Vuyu. And one of the things we always like to monitor is what you thought. So, for example, the dates for this program were set, and early on, because I get very busy, and we then discovered from people taking the course towards May that they would have preferred to have more time between the two sessions, the time to read over before they do the second session. So next time we're doing it on consecutive Mondays, okay, as opposed to doing it Monday and Wednesday in the same week. So those kind of suggestions really help us. Okay, Larry, I'm sorry you missed Monday. We missed you, but the recording will come out. But the problem now, Larry, is you'll say you're waiting for it. Miss Vuya's already sent it. Okay, so I wonder why you've not received it. Okay, so you perhaps need to contact Miss Vuya, who you can see there. Okay, and actually say to her, have you got my email address? Okay, but before you do it, just check your junk mail in case Miss Vuya has actually sent it to you and you didn't notice it. So you've got loads of stuff to read. Okay, make sure, okay, that by the end of this, and I will send it all to you, you should end up, by the time the exam comes around, with 9 mock exams and solutions. Okay, you should I also send you out 5 practice tasks. You've seen one. There's 4 others. Okay, which is like little bite-sized 1-hour things. Okay, I hope you found it helpful. I certainly enjoyed with you. I'm sometimes rather critical of your contributions, guys. It's done with kindness. Okay, I'd rather you heard it from me than you heard it in the result. Okay, so it's just be more self-critical of some of the things you say before you say them. Miss Vuya's email address, I think, is actually visible to you. Okay, I can see it. Okay, it's actually standing right there. Okay, so you can obviously get that from Leo. Miss Boo's actually sent her that email address to you now. Events, okay, events South Africa at AICPA-SEMA.com. Okay, I hope you found it useful, guys. I'm going to bed now, so I'll start teaching Chinese people again tomorrow at 1 o'clock. Okay, and of course, those people who are on the program with me know I'm seeing you tomorrow evening. Okay, and on Saturday. Okay, so I can't wait for that as well. My pleasure, guys. Dan, give it a go. Okay, you've booked, have you? Okay, give it a go. Rest of you, for goodness sake, book your exam space. Okay, book your exam space. Okay, you've only got until the 9th, and by the time the 9th comes around, there'll be nowhere left to actually sit. So just book it now. You'll be fine. It's always worth a gamble. Okay, guys, have a good night.
All right. Thank you, Adrian. Have a good night too.
Thanks, Adrian.
Thank you, Adrian. Thank you so much. Thank you.
You're all lovely.
Thank you. Bye.
So polite. It's wonderful. Moses, there you are with your lovely tie. How you doing today, sir?
I'm very fine. Good evening.
You're always fine, Moses. I think you're a wonderful character. I'd love to meet you face to face. You're a great character, a lot of heart. I'll see you tomorrow night.
All right, sir. Thank you.
See you soon, mate.
Thanks so much for your time.